What you can see, it's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, eConcrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing eConcrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
eConcrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. eConcrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, eConcrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks have resumed swinging between gains and losses as traders continue to assess risks from China's crackdown on the real estate industry. They're also looking ahead to tomorrow's Federal Reserve decision. Here's where we stand. Moments ago, the S&P was negative, now up barely, higher by 2 points, up less than 0.1%. We've got the Dow up 33, higher by 0.1%. NASDAQ up 42, up 0.3. 10-year yield right now 1.32%. Bottom line, choppy trading. NASDAQ 100 index up 0.2%. Russell 2000 up by 0.3%. But the Dow transports are trading lower by 0.2%. Spot gold up 7 cents. Up $12 the ounce at $17.76. West Texas Intermediate crude up 0.4%, $70.52 a barrel. The Federal Reserve opens a two-day policy meeting today. We could be in store for a major announcement. And let's get that story now from Bloomberg's Vinny Del Giudice.
Wall Street sees Fed officials edging closer to winding down their emergency bond buying program, and the meeting could set the stage for tapering later this year. For the economy, the outlook is somewhat at risk. Official interest rates could rise next year, and the positive impact of federal stimulus is fading, at least for now. We'll get official word Wednesday. Vinny Del Giudice, Bloomberg Radio.
Uber Technologies, the ride-hailing giant that once posted a quarterly loss of $5.2 billion, says in a filing it may be finally about to turn a profit. We've got shares of Uber driving higher now, up by 12.4%. Crosstown rival Lyft up by 6.5%. Both companies based in San Francisco. Among the companies reporting after the bell today, FedEx, Adobe, and Stitch Fix. FedEx shares, they are unchanged. Recapping stocks higher, S&P up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Hi, stranger.
Hi. Did I miss anything?
What, you mean yesterday?
Yeah.
Yeah, it was a very different tone.
It was.
In the market. Welcome, everybody, live from our Bloomberg Interactive Broker studio, streaming on YouTube, Tuesday, September 21st, 2021. Stocks kind of looking for a direction here.
Yeah, look, buyers at the open, and then some sellers.
Seen that movie before.
Yeah, exactly. It's struggling for direction right now as we speak.
Yeah, exactly. And we've got the Fed kicking off that two-day policy meeting. Of course, the decision tomorrow. We're going to talk, Tim, to a former U.S. Treasury official about monetary policy, see what he has to say. And surprise!
Robots and algorithms, guess where they rule?
Yeah, Amazon perhaps?
Yeah, and a lot of other companies are trying to adapt what Amazon is doing. Instacart, Walmart, and more.
This is a really cool story. It's in the magazine. Also, we're going to talk about the contrarian Peter Thiel. He is the subject of a new book. And we're going to talk Big Macs, Happy Meals, and sustainability. Does that work for you?
That works for me.
I love a good Happy Meal. All right, first up, let's get to the Market Drivers Report. And let's set that Business Week agenda. In the house, we've got Dave Wilson, stocks editor at Bloomberg News, here in our Interactive Broker studio, along with Preeti Gupta, Markets Live reporter at Bloomberg News. Dave, it's a different tone today.
Yeah, it's looking a little sleepy at the moment, actually, which is saying something considering how lively it was yesterday. I mean, you go through the 11 main industry groups in the S&P 500, and, the biggest move in either direction, industrial stocks, down about 0.7%. There are a whole lot of shares that have just kind of stabilized, at least for the moment, relative to where they were yesterday. And we have seen ups and downs, no question. The initial advance lasted maybe 15 minutes. That's actually a little longer than we've seen lately. And then, stocks pull back to the lows of the day, and then up again, and then down again.
But there's green. Creedy, we did not have green yesterday.
We did not have green yesterday, but I think Dave nailed the point that it took 15 minutes for the sellers to show up. That is a rare occurrence. Nowadays, people fade the open. I know. They're asleep at
coffee this morning.
They're asleep at the wheel,
stocks
Carol.
Can't always go up.
Well, I mean, what's interesting here is
the short
that
sellers are happy about that.
Well, this is something that people were waiting for. This was the crucial test. If the S&P 500 can stay above in the green, above the 50-day moving average for today, then maybe the selling is over. That was the kind of sentiment going into this morning, but it doesn't seem like we're there. And another kind of takeaway here is that if you do see this bounce, is it just a bounce? And do we see the selling really restart tomorrow? Because at the end of the day, it's September, and seasonally, that tends to be the month that we have the worst corrections and the worst crises.
Historically, yeah.
Well, Kriti, what are analysts telling you? What are sources telling you? Was this kind of the September jitters getting out of everyone's system and things are going to remain calm for the foreseeable future? Is there kind of a lull today because we're waiting to hear from Fed Chair Powell?
Yeah, well, I think 2 points on that. We'll start with seasonality because it's a really big one that I think a lot of people have forgotten that in, the last year we've just gone up and up and up. And the last time we had this major correction was last September during the major tech wreck. We had that big election risk kind of priced in.
Right.
And then you also mentioned pricing in the Fed. I think that's really where the tug of war comes in, because I think maybe without the Fed, I mean, this is me putting my 2 cents in, but I think without the Fed, it would have been a much easier trade. You buy the dip and then you carry on tomorrow. But I think a lot of people are kind of have that tug of war because you do have to anticipate one step closer to a potential taper.
Dave, you've seen lots of market cycles. What is it about the seasonality of a September that often causes stocks to go down here?
Think about it. You're kind of in between earnings periods, people looking ahead to the fourth quarter and next year, because by the time you get to September, it's like, the current year's earnings aren't really the issue. It's what next year looks like. And of course, the difference maybe this time around is that we've seen so many market strategists in one form or another be cautionary in terms of what happens the rest of the year.
Wait, who was it though that said buy the dip? Who was it this morning? There was a story on the Bloomberg. I got to find it. I have it somewhere.
Everyone said buy the dip.
Right.
Everyone was expecting that to happen because that is what has happened in July and May, the last time you had these gap lowers.
And I'll just point out for the moment, you have 4 stocks down in the S&P 500 for every 3 that are up. Even though your index is higher, it's hardly a broad-based advance.
Okay, so explain that though, Dave. Like, what is that telling you? It's the big companies that are driving the stock. The index higher?
You look at what's going on. You see the big tech companies moving up. Not much for the most part. I mean, Amazon's off 0.4%, but at least there are gains. And sometimes that's enough on a day when the market really doesn't have a whole lot of direction to kind of dictate whether the S&P 500 is up or down. But broader market, you're definitely seeing some weakness. I'm looking at those owners of Macau casinos again, taking hits here. Las Vegas Sands and Wynn Resorts have the 2 biggest declines in the S&P 500. And we've certainly seen those companies and MGM Resorts, which is tied into a whole nother story, take hits because, concerned that regulations ratcheting up.
Something we talked about with Andy Brown of Bloomberg New Economy. The Fed will get the decision tomorrow. Could that potentially set a new trend when it comes to the market cycle here?
It could. I mean, we're at the whim of the Fed. You're seeing that right now. I mean, it's really a tug of war in the market for our radio listeners who are looking or who aren't looking at a chart. It quite literally is a total roller coaster. And whether this kind of seasonality takes place or whether the buyers do show up, it really does depend on how much support the Fed will convey tomorrow.
Is it coming soon? Is it coming later? Is it I don't know? Is it I don't know, right? All right, we got to run. Kriti Gupta, thank you so much. Markets Live reporter here at Bloomberg News. Dave Wilson will be back later on with his chart of the day. Want to quickly mention a headline. A Justice Department-led panel investigating Zoom Video and its deal to buy an American customer service software company, citing potential national security risks posed by the U.S. video conferencing giant China ties. That stock right now just down a hair, down 0.1%. Should we do the bite?
Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, today's number, $135 billion. A global rout in stock markets sparked by concerns over China Evergrande Group hit the world's biggest fortunes yesterday, with the richest 500 people losing a combined $135 billion. Tesla's Elon Musk leading the way and leading those declines as his world-leading net worth fell $7.2 billion to $198 billion, according to the Bloomberg Billionaires Index. But again, I'm guessing he's probably making some of it back today.
Yeah, and also comes off a good few days for him with the success of the SpaceX, first civilian mission.
Tesla's up 1.4% today, so he's making some of it back.
No, don't shed a tear, Carol.
I'm not.
Okay.
Elon's going to be okay, I'm pretty sure. All right, let's see about the world, though, and The Nation checking in on that. Nancy Lyon, she's in our D.C. newsroom. Hey, Nance.
Hey, Carol. President Biden is urging the world to turn from conflict toward cooperation against the looming threat of climate change. He gave his first speech today at the United Nations.
When we meet the threat of challenging climate, the challenging climate we're all feeling, already ravaging every part of our world with extreme weather? Or will we suffer the merciless march of ever-worsening droughts and floods, more intense fires and hurricanes, longer heat waves, and rising seas?
Biden pledged the U.S. would double its financial support to help low-income countries adapt to a warming climate and shift to clean energy. House Democrats are set to vote this afternoon on a bill that would suspend the U.S. debt ceiling until after the 2022 congressional elections and temporarily fund the government to avoid a shutdown after the end of the month. Congressman Henry Cuellar tells Bloomberg raising the debt ceiling should not be viewed as a political choice, as it's been framed by the Republicans.
When President Trump was there, it was okay for them to raise it. Now there's a Democrat, so it's not okay to raise it. So to me, it doesn't matter who the president is. We have to do the responsible thing, and that is do a CR, and then, of course, doing the continuing resolution, make sure there's no government shutdown, and, of course, making sure that we suspend the debt or raise the debt ceiling.
You can hear more with Congressman Cuellar later today on Bloomberg Sound On at 5 o'clock Wall Street time here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Tim and I just catching up behind the scenes. Man, it's been like I've been out, you've been out, I've been out, you've been out.
I think it's been more than 2 weeks since we did a show together.
Yeah, it feels good. It's really good to have you back.
Oh, it's good. It's good to be back. I missed you too.
Tons. In the meantime, it's really fascinating to kind of. I always feel like I get some perspective. I go away and I definitely read news. I can't help it. It's in my blood. But
well, we're still in a pandemic.
But we're still in a pandemic. Yeah. Like so many of the headlines, even if you take a few days away, you realize there's a lot of serious stuff going on. So let's talk about the virus headlines.
Yeah. So let's start with the FDA decision on Pfizer's booster. It seemed to be coming as soon as Wednesday. This, according to people familiar with the matter, the FDA Pfizer booster decision expected ahead of the CDC panel vote later this week.
I have to say, with the boosters, I too have been watching. I'm like, well, wait, why? How come the vaccine I've gotten hasn't gotten okayed for a booster? Or like, I'm watching this very closely.
Well, there's so much confusion around it too, and I regular listeners of the show know that I mention this over and over again. But it's like, if you got Pfizer, do you get a Moderna booster? If you got Moderna, do you get a Pfizer booster? What about J&J, which we're going to talk about in just a second?
Right.
A lot of questions. Do you get it if 65 and older, but you're not immunocompromised?
Correct.
What are the conditions that? This is science playing out in real time.
And we both know people who are talking about people who know people who've just walked into a pharmacy and said, can I get a vaccine?
And we know people.
It's a third shot.
We all know people who've gotten breakthrough infections that have,
yes,
put them in bed for a few days.
So at the same time, we're waiting for, more about for kids and younger populations. Meantime, a booster dose of J&J's COVID-19 vaccine provided 100% protection against severe disease when given 2 months after the first inoculation. This is according to widely anticipated data that suggests it increases the potency of that one-time shot.
Yeah, the booster was 94% effective at preventing symptomatic COVID infections in the U.S. portion of the Phase 3 trial, and 75% effective overall when it was given 56 days after the initial dose. This is according to a statement from Johnson & Johnson.
Do you know, this morning, I actually was at a doctor's appointment. They're like, did you get the COVID? Yeah, I'm like, yeah. Oh, can we see your card? I couldn't find it, and I was like, so stressed out, and I found it. You got to get it on your phone. I have it now. I have it on my phone, but I was stressed out.
We got it in New York. You and I got it in New York, so we have it on our phone.
Yeah, exactly. That's right. All right. More to come right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy Tuesday here. We've got the Dow, the S&P, NASDAQ all higher. Right to the numbers. We'll give you the why in a moment with the S&P up 3 now. That is a gain of just under 0.1%. The Dow up 30, up 0.1%. NASDAQ up 51, higher by 0.4. Bottom line here, stocks have been swinging between gains and losses as traders continue to assess risks from China's crackdown on real estate. The real estate group they're also looking ahead to tomorrow's Fed meeting. S&P whipsawed after opening broadly higher, which initially suggested some improvement in sentiment. Again, the S&P up now by 4, up 0.1%. We've got the 10-year yield at 1.32%. Spot gold up 7.10, $17.75 the ounce, and West Texas Intermediate crude up 5.10, $70.61 a barrel. A DOJ panel is investigating Zoom video communications deal to buy American customer service software company Five9. That according to Dow Jones, which cites a letter posted on the FCC's website. Zoom video communications, ticker there ZM. It is down now by 0.1%. Recapping, stocks higher, fluctuating but higher. S&P up 3, up 0.1. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. We mentioned some of the headlines. J&J's vaccine providing 100% protection against severe disease. That's a booster dose. We have Chinese officials shutting down the northern city of Harbin after a single patient was hospitalized. We continue to break or deal with, outbreaks and some progress and then some setbacks. Dr. Rhonda Meadows, though, Tim, is president of population health over at Providence Health System, one of the largest nonprofit health systems in the U.S. And you might remember they were home to the first confirmed COVID case back in early 2020. So we really appreciate their perspective. She joins us on the phone in Renton, Washington. Dr. Meadows, good to have you back with Tim and myself. How are you, and what are you guys seeing there out west when it comes to COVID?
It's great to be back with you. And what we are seeing is we still have some areas of spikes. Surge is still occurring, like in eastern Washington, Montana, and Alaska. But thankfully, we're seeing a little bit of plateauing in California, as well as in parts of Oregon. Washington seems to be fairly stable as well. We're not over the hump, but we're seeing a little bit.
Dr. Meadows,
daylight coming through.
Just to confirm, are these outbreaks, are these happening in unvaccinated populations?
Predominantly unvaccinated, a very small percent are vaccinated.
Is there any sort of... Yeah, go ahead.
I was going to say the few that I think are breakthrough vaccinated are usually people who are immune compromised or have other chronic illnesses behind them, but mostly unvaccinated.
And where are you right now falling when it comes to boosters and what you're seeing as far as people coming in who want boosters or guidance coming from doctors about who should get a booster?
So we're seeing a lot of questions and inquiries coming in, and we are actually sharing with them what we know, including the most recent announcement coming about the FDA panel of advisors recommending boosters for people who are immune compromised. We're waiting for their final word on people who are over the age of 65 getting it, who are otherwise healthy. Patients are asking about it. It's kind of a mixed bag depending on which community you're in. Some are anxious to get it, and some still are waiting to get the first shot.
I'm like, poke me as much as you want. I got my flu shot this morning. I'm like,
oh,
just go
good.
ahead. No, but it is important, and I do wonder. We keep reminding Dr. Meadows, you understand this so well about the importance of community, and so the importance of individuals who don't even have a first shot, of getting a first shot, of making sure the developing world is getting vaccinated, because we can't move forward as a global society and community unless most people get some form of vaccination, right, or some kind of immunity.
You are absolutely correct. If we leave anybody uncovered, it becomes a hot spot that then can spread. It's also a hot spot for mutations to occur. So everybody needs to get it.
So I am curious, there was something I was reading or listening to this morning that I think was looking at China specifically, how maybe they shut down kind of their cities. I mean, this is it. This is how it's going to be moving forward. I mean, you can't convince maybe everybody to get a vaccine. We kind of know that already. So are we going to be constantly in a state of, we'll see some COVID outbreaks? People would be getting boosters? I don't know. Like, that's what I'm trying to understand.
You know, I think, first of all, I think it's too early to tell, but I can tell you that I'm going to agree with you that I hope certainly not. I think what's going to happen is we'll slowly but surely convince more people to get the vaccine. The people who actually have gotten sick from COVID may now become our best spokespeople for encouraging their family and communities to do it. But I don't think this is going to continue just forever. That's not the way that vaccines and pandemics work. So I think what we're going to find is that we're going to see the counts starting to go down again, closer coming into December, unless another new variant comes up. And I think eventually over the next couple of years, it'll start to blend in a little bit more. So you just mentioned you got your flu vaccine. There may be a time when we're getting a flu vaccine and a COVID mixed together, combination vaccine.
Fine.
Tim's like, sign me up.
Yeah, yesterday. I will do that yesterday. Dr. Meadows, as a parent, what should we know about or how concerned should we be about kids? What are you seeing in the Providence Health System when it comes to kids who are severely ill, those who don't even have the chance right now to get vaccinated because they're not old enough?
We're seeing an increase in the number of children who not only are testing positive, but even because it's the magnitude of the number of people who are exposed, including children, we're seeing more kids coming into our hospitals and becoming more severely ill. Thankfully, the mortality or death rate from them is still relatively low. But I got to tell you, if it's just one kid and it's my kid, that's way too many.
Agreed.
Just to put that out there.
Agreed. Dr. Meadows, sit tight. We just have to do a little bit of news, but we will come back and would love to continue with you. Dr. Rhonda Meadows is our guest, president of Population Health at Providence Health System, joining us on the phone from Wenton, Washington. Are you just kind of waiting? I mean, you have a little one.
Yeah, we do. So part of the reason I was off over the last week is because he started preschool. So it's like a phase-in thing. All parents are familiar with this. When kids start preschool, they're going into an hour and a half, and then eventually, a few hours, and then all day. But he's not keeping his mask on. He's 2.5. He's supposed to wear a mask at school, not keeping his mask on. But who can blame him? He's 2.5.
He's 2.5.
And it's not required at the school. It's suggested, but you can't really require a 2.5-year-old to wear a mask.
Right, exactly. Right. They're little critters, and so what do you do? So are you kind of bracing?
Yeah, well, so they do weekly tests, which is great.
Of the kids?
Yeah, of the kids. Yeah, it's very hard to teach a 2-year-old how to spit. Any parent will know that. He has no idea. Yeah,
but then you get a kid
who
learns how to do it, and then it just doesn't stop.
Yeah, great. That's probably what's going to happen.
Stay tuned. All right, folks, we're going to come back with Dr. Meadows in just a moment, talking about the day's latest COVID headlines. You're listening to Bloomberg Business Week. I'm Carol Masser, my co-host Tim Stanovic. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I just want you to know I'm kind of teasing ahead. I can't wait to talk about it. I guess it goes by BF14.
Oh, the warehouse?
Yeah.
Yeah. Amazon.
Yeah.
Robots rule.
They do. So do algorithms. We're going to talk about that in just a moment. But in the meantime, we're going to get back to Dr. Rhonda Meadows over at Providence Health System. She's president of Population Health, getting our daily COVID update.
Yeah, I was thinking a lot about pre-pandemic and post-pandemic, and I've been thinking a lot about how the idea there's probably not going to be post-pandemic, at least not for a long time.
Right. There was a point where I really thought, okay, the skies will clear.
Yeah.
But I don't feel that way.
And look, maybe we can look to history, 100 years ago, what happened, but at the same time, adjust expectations for what things look like on the other side.
Definitely doing that. We're adjusting expectations when it comes to markets as well. Let's see what Charlie Pellet has to say about the trading day.
And we are looking at a down day right now. That's a big change since our last update, at least for the Dow Jones Industrial Average. On the minus side, Carol and Tim, red on the screen right now. We've got the Dow down 5, drop now of just about 0.1%. S&P all over the map, swinging between gains and losses, up now by a point. Little change. That's the key takeaway. And NASDAQ higher by 44, holding on to a gain there, up 0.3%. Stocks have been swinging between gains and losses. Traders continue to assess those risks from China's crackdown on the real estate industry. Also, they are looking ahead to tomorrow's Fed decision. The Walt Disney Company leading the Dow lower. Shares of the Walt Disney Company now lower by 3.4%. 10-year yield 1.32% now. Spot gold up 0.6, $17.75 the ounce. And West Texas Intermediate crude oil up 0.4%, $70.56 a barrel on WTI. A booster dose of J&J's COVID-19 vaccine provided 100% protection against severe disease when given 2 months after the first inoculation, according to widely anticipated data that suggests it increases the potency of the one-time shot. It comes as COVID-19 deaths surpass the toll of the 1918 influenza pandemic, a milestone many experts say was avoidable after the arrival of vaccines. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and he talked about the significance of that number this morning with our Tom Keene.
There are some people who have argued that maybe the Johnson & Johnson vaccine should be a 2-dose vaccine, just like the Pfizer, the Moderna, the AstraZeneca. And this is data showing that perhaps that is the case, that the protection, which is still very strong against severe disease that you get with 1 dose of Johnson & Johnson, can be increased by making it a 2-dose regimen. We'll have to see what the actual data shows. We'll have to see what Johnson & Johnson plans to do in terms of going to the FDA to either modify their vaccine to make it a 2-dose shot or to say we need boosters at a certain period of time. But again, this is a debate that will play out over time.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking vaccine stocks, Pfizer lower by 0.6%. Its German partner BioNTech, its ADRs up 1.7% right now. AstraZeneca's ADRs up 1.1%. Moderna up by 3.2%. J&J up by 0.5%. Recapping, stocks are trading higher right now with the S&P up by 2 points, up less than 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks, Charlie. It's BFI4, by the way, the distribution center. I want to make sure I get it right because I want to make sure I keep getting my Amazon packages. Busted. Thank you, Ari, our producer. All right, let's get back to Dr. Rhonda Meadows. She's president of Population Health at Providence Health System, still with us on the phone in Renton, Washington. So one of the things that we've certainly seen is society stressed. We've seen healthcare workers stressed. Dr. Meadows, what are you seeing on that front?
So absolutely, not just stressed, but exhausted and dismayed by some of the contempt that they feel for the very people that they're trying to help. So our cases are increasing, our hospitalizations.
What do you mean? What do you mean by that? What do you mean anecdotally?
Actually, what I mean is not only are people that are unvaccinated coming in to seeking care, but some of those same people are standing outside of our hospitals who are protesting against vaccinations. They get letters left on their car shield when they come out from a long shift working in the emergency room or in the hospital. They see the social media disparaging comments against them, what they're trying to do. So it's not just about the vaccine, it's basically about their efforts to try to help people and save people and promote the science of getting a vaccine, reducing the transmission, and reducing the number of people who need hospital care on the first place.
Well, we live in a world of scarce resources, and one narrative that has emerged over the last few weeks has been the way that ICUs in certain parts of the country have filled up, and you see percentages in the high 90s in some places in the past few weeks. And I wonder about the decisions that doctors have to make about, okay, who is able to use this scarce resource that we have, whether it's a certain number of nurses per patient or a certain number of patients per nurse. And I'm wondering what goes through a doctor's head when they have to make those decisions.
Well, first, I can tell you that the doctors aren't making the decisions alone. We are actually well prepared to try to make the decisions. They're still hard. I think what you're referring to is when we go to a crisis standard of care, when we're trying to make a decision about what little resources, how will we use them, and who will we use them for, and how do we decide that kind of stuff. You never want to be in a position where you're having to ration care, but that's where we are in some places. And Tim, I want to tell you, it's not just about rationing care for people who are being treated for COVID. It's rationing resources for anybody who needs that ventilator, oxygen therapy, the doctors or nurses.
Well, that's what I mean. It must be frustrating to patients and to caregivers if people who are using resources that essentially don't need to be there, people who could have been vaccinated and wouldn't even be in the hospital, and perhaps are making it more difficult on patients who have a heart attack or some other emergency condition. You are absolutely right. And we see that and we feel it. And for the most part, I think our doctors, nurses, caregivers that are they're trying their best to do what they can, but they're only human.
Well, we wish you luck.
They're only human.
Exactly. And that's something we need to remember in terms of what's going on today, what's going on tomorrow. And we really appreciate getting another glimpse of what you are seeing. Dr. Rhonda Meadows, stay safe, be well, President of Population Health at Providence Health System, as you might recall, home to the first COVID-19 case confirmed back in January of 2020. She joined us on the phone from Renton, Washington. That's tough.
It's tough, and Carol, we're approaching the 2-year mark as to where, when COVID was circulating around the world and in the United States. And it's mind-boggling to think about
2 years.
That. 2 years. Here we are in the fall of 2021.
And I know, my daughter's gone back to school. She's in college now, and they have a vaccination policy, but they gave some leeway of kids to get vaccines after they came back to school. And there are cases coming out, and they're keeping kids in classes, but they're trying to make it work, but it's tough.
So in college, masks in class?
Masks in class.
Everyone's masked
Any
up.
closed place, yep. And there is a vaccine mandate, but again, they were allowing kids to kind of get vaccines.
But so far, so good?
So far, so good, but there are cases, though, that are definitely breaking out. All right, coming up, a great story in the Sooner Than You Think issue of Bloomberg Businessweek magazine. Get ready, robots and algorithms, they're at work at Amazon.
Yeah, they're not coming for you. They're at work already.
They are. All right, let's get back to world and national news. Nancy Lyons in our 99.1 Newsroom in the nation's capital. Hey, Nance.
Hey, Carol. President Biden is assuring the United Nations that the U.S. is back at the table in international forums, prepared to lead from COVID to climate.
The president said that instead of continuing to fight the wars of the past, the United States would stress diplomacy and alliances.
The United States will continue to defend ourselves, our allies, and our interests against attack, including terrorist threats. But the mission must be clear and achievable, undertaken with informed consent of the American people, and whenever possible, in partnership with our allies.
The president said the United States will oppose efforts by stronger countries to dominate weaker ones, whether by force, economic pressure, or disinformation. In Washington, Irv Champman, Bloomberg Radio.
Johnson & Johnson says a booster of its COVID-19 vaccine 2 months after the first shot offers 94% protection. The company says additional data shows a 4-fold increase in antibodies when given at 2 months compared to a 12-fold increase in antibodies when the booster is given at 6 months. Well, the FDA is expected to decide as soon as tomorrow on whether to recommend COVID-19 boosters made by Pfizer and BioNTech. If approved, a program for the extra shots could start in just days. An autopsy is being conducted today in the death of Gabby Petito after a body was discovered over the weekend at the Grand Teton National Park in Wyoming. The body is believed to be Petito, but forensic identification is being conducted for confirmation, as well as the autopsy to determine the cause of her death. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, along with Tim Stanovic in our Bloomberg Interactive Broker studio. Lael Brainerd.
A lot of stories about her.
Yeah, well, speculation, right? Could
Yeah.
she be the next one to take over?
Yeah, and the story that we're talking about, among the most read on the Bloomberg terminal this afternoon, is by our own Robert Schmidt and Jesse Hamilton. They write that Lael Brainerd's record fighting back at the Trump administration loosened the leash on Wall Street has made her a leading candidate to be the Federal Reserve's banking watchdog, and that is not the only job she's in line for.
That's right. The central bank's lone Democratic governor, Brainerd, is also being discussed for more prominent Biden administration appointments, including to replace Fed Chairman Jay Powell and potentially Treasury Secretary Janet Yellen if she leaves. We know, right, halfway through an administration, sometimes you often see a lot of movement.
You do.
Sometimes.
Sometimes. I think that it's hard to compare this period of time with other periods of time, given that the U.S. given what's happening in the U.S. economy, given what's happening with the virus and how the two are inextricably linked.
Right.
I would be surprised. Well, I don't want to say nothing surprises me anymore, but this is not a typical time in American history, I think.
And I do wonder how investors will see it. Do they want continuity, certainly in a Fed chief? Do they want continuity in a Treasury Secretary as we, hopefully, fingers crossed, everything crossed, increasingly come out of this pandemic? Do you want somebody who's kind of been familiar with the process all along so that if you're a new individual, are you sometimes feeling like, wait, I got to do something, you know what I mean? And rather than perhaps stay the course.
Yeah.
Or maybe sometimes a new perspective is what we need.
Maybe. I think this is a good question to talk to Dr.
I'm my own little debate
Steve
team.
Skanke
Didn't you like
about
that?
in just a few minutes. Yeah, you are. This side and this side.
Exactly.
Did you come to an answer when you were talking about it?
I don't know. You and I were talking. I remember the crisis, and I do think to some extent there was some continuity, certainly, in people who stayed through. And then I think once we were on the other side of it, I mean, it was exhausting for people who were probably working 24/7 to get us through that crisis.
And I also think politically there's something to be said about the Biden administration leaving somebody in who was appointed by the previous president and previous administration if he or she is doing a good job.
Exactly. And I guess we shall see. We'll talk to Steve Skanke, though, about a lot of this. That's coming up on Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow now lower, been that kind of a session, very choppy, swinging between gains and losses. We have got the S&P higher by 3, little change there, up by about 0.1%. The Dow again down 5 points. NASDAQ higher by 60, holding on to gains, up by 0.4%. Disney weighing on the Dow Jones Industrial Average. Right now, the Walt Disney Company is down 3.9%. This is Management Presents at a Goldman Sachs conference, have been down as much as 5.4%. Again, the Dow now lower by 7 points. Stocks swinging between gains and losses as traders continue to assess risks from China's crackdown on the real estate industry. Also, investors looking ahead to tomorrow's Fed decision. 10-year down 3/32, 10-year yield right now 1.32%. We've got gold up 0.7, $17.75 the ounce, and West Texas Intermediate crude up 0.4, $70.56 a barrel. After the bell, lots of important earnings. We will be hearing from FedEx. Shares up now by 0.2%. Adobe also reporting up now by 1%. Stitch Fix lower by 2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, really appreciate that. Well, the upcoming Sooner Than You Think issue of Bloomberg Business Week out later this week. Already, though, on the Bloomberg and at businessweek.com. It's a story that takes us, Tim, inside Amazon's flagship fulfillment center outside Seattle, and it's all about algorithms and robots. They rule.
Sooner than you think. They're here already. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio. Matt Day is technology reporter. He wrote the story. He's with Bloomberg News, and he joins us on the phone from Seattle. Joel, what is so special about this one fulfillment center that Matt profiles?
So it's outside Seattle, and it has the reputation of being a flagship, sort of almost like a test lab, I guess you could think of it as. And I think part of that is just, proximity to HQ.
You can get those executives coming by and saying, hey, wait a second, how do you guys do things here?
But what they've really done, the significance of this is that this was the first fulfillment center that was able to process more than 1 million packages a day. And so obviously that, once they optimized that, it was like, where else can we take it? And the secret to that, though, as Matt has revealed, is that there's a lot of algorithms, there's a few robots, and the humans work for all of them. Right, Matt?
Yeah, that's right. Honestly, the starting point for this story, I met a guy who used to work at Amazon, went and jumped somewhere else, and he said, man, I'm doing so many things that I never had to do back when I was at an Amazon warehouse. They had just automated all of that for me.
Well, tell us more as you walk BFI 4, which is this massive fulfillment center outside Seattle. Tell us about it. Did you go visit?
I did, yeah, and it's a place I've been a couple of times over the years, writing about Amazon. As Joel said, they love to have folks in for tours. They're really proud of the facility. It's just a big exurban rectangle, size of 15 football fields. You go in and there's this kind of low hum, but the weird thing for me is it's kind of quiet. Everybody's sort of in their own station. Most people probably by number are putting something in a shelf that's brought to them by a robot, or retrieving something from a shelf and sending it on down the line. A couple of thousand people a day, just, doing roughly most of them the same task over and over again, whether that's picking something off the shelf, putting it in a package, and taking orders from a smartphone app the whole time.
What does your instinct tell you about a facility like this when you walk inside it and you see it? Does it seem like, given the number of packages it's able to process a day, does it seem like more people should be there?
It really does. The place there's a low hum, but it is kind of eerily quiet. Like you would assume, hearing figures like 1 million packages a day, that there'd be more frenzy. But Amazon's just got it down to such a science that everyone's just sort of quietly going about their business at their station.
Quietly working for algorithms and robots. So what is the human toll of that?
Even told that, well, it's working in an Amazon warehouse is often an unpleasant place, and that's been widely reported. Amazon's productivity tracking systems are real precise, right? They can tell when you're working, they can tell when you put down the scanner. So if you're in one of these frontline jobs, there's always this voice. Sometimes it's just literally a countdown clock on your workstation telling you exactly what they expect you to be able to do. And Amazon, a very aggressive company, sets that target real high. So that's the life for the front line. But one of the things that interested me, especially given that story is so well known, is so what the heck do managers do in this construct, right? If these people are working kind of self-directed, what are the people at the top of the pyramid in a building like this? What do they all do all day?
Well, they get to manage a lot more people, right?
They do, and a lot of what they do is HR. Essentially, they're trying to get the best out of people. They're trying to troubleshoot when something goes wrong. Just because again, all of the software whizzes at Amazon have taken things out of their hands, right? They don't do staffing planning at a granular way. A lot of warehouses in any company will do, right? Most places you go to work and the boss or the schedule tells you where to go. Here, the schedule is worked out by algorithm, right? There's just so much that's been taken off their shoulders, kind of with the aim of getting this thin line of managers to effectively manage thousands and thousands of people.
So when you think about this, actually, just real basic question: what's BFI4 stand for? What is that?
So it is a reference to an airport in Seattle called Boeing Field. Every Amazon building across the country takes its name from whatever the regional airport is.
Okay, so that was a basic question I forgot to ask during the edit.
But a good
confession.
one.
But
you get to know how the sausage is made when Cole comes to the studio.
So Matt, the other thing is, obviously this is somewhat of a secret weapon for Amazon, and has allowed them to really become such a dominant company. But how does this automation compare with the Walmarts and the Targets of the world that compete with them?
Folks are definitely closing the gap. Amazon has, built a lot of its technology. It's bought a lot of its technology. We read about their seminal acquisition of a little robot maker called Kiva back in 2012. That gave them a real big head start. But companies, are imitating what Amazon does, and they are closing that gap, right? Amazon's biggest advantage a few years ago was getting things out of these buildings as fast as they can. Today they're looking for secret sauce just because, the Targets of the world, the Walmarts of the world are kind of taking their cues from Amazon's roboticized fulfillment and putting it in their own operations.
Matt, from a financial perspective, the ultimate goal for any company that has this many employees is to reduce the number of employees because they're so expensive. Help us see into the future and Amazon's ability to actually automate nearly everything.
Yeah, Amazon has set aside full automation as a long-term goal. It's something their technology teams and their roboticists are working toward. I think realistically, they don't see that as practical for a long, long time. But that doesn't mean they can't get savings along the way, right? We talked to some folks who had insight into their Kiva acquisition and said they saved something like 30% on labor costs in the first implementations of their robots come to people operating method. So there's definitely a lot of costs that Amazon can look to reduce, without going kind of that dream of a fully automated facility that doesn't require any humans at all.
So how much better has this stuff gotten with practice and time? Is there any sense of that?
We do know that, how to call it, in a 5 or 6 year period, they were maybe 3 times as fast, right? State-of-the-art warehouse, roughly a decade ago, was doing something like 300,000 items a day, as you mentioned, kicking us off. This facility can do 1 million plus. That stat, though, I put an asterisk on. That's getting a couple of years old now, so it would not surprise me at all if Amazon is setting a new threshold and just isn't quite ready to brag about it yet.
All right, so to be feared or imitated or both?
Oh, it's certainly both, depending on your line of work. But yeah, they've definitely reshaped warehousing in their image with this kind of technology.
It's an incredible read. Matt Day, thank you. Tech reporter at Bloomberg News, joining us from Seattle. Joel Weber in our Interactive Broker studio. But I think it's interesting because I think we expect robots and automation to take some of the lower level jobs, but it sounds like you'll need fewer, maybe higher paying managers also in the process if other companies start to follow what Amazon's doing.
I think it's like inevitable that other companies will, right? Like if you can go from
right?
300,000 packages a day to 1 million, it's like, how do I get that?
How do I get that, and how do I reduce costs in the process?
All right. Sign of the future. All right, we got to run. Joel Weber, thank you so much. Check this out sooner than you think. That's the upcoming issue of Bloomberg Businessweek magazine. You are listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy Tuesday here. The Dow, the S&P, NASDAQ, they do remain higher right now, but stocks have been swinging between gains and losses as we move into the final hour of trading. Traders continue to assess risks from China's crackdown on the real estate industry. Also, investors are looking ahead to tomorrow's Fed decision. S&P up 11 now, higher by 0.3%. NASDAQ up 88, up 0.6. The NASDAQ 100 index up 0.5. Dow Industrials up 57, a gain there of 0.2%. Shares over the Walt Disney Company have been weighing on the Dow. CEO Bob Chapek says Wall Street can expect to see a low single-digit millions increase in streaming subscribers in the fiscal fourth quarter. That came during a presentation at a Goldman Sachs conference, but right now Walt Disney shares are lower by 3.2%. 10-year down 4/30 seconds, 10-year yield 1.32%. Spot gold up 0.6 now, 17.75 the ounce, and West Texas Intermediate crude up 0.4%. WTI 70.56 a barrel. Ray Dalio, the founder of hedge fund Bridgewater Associates, says China Evergrande Group's debt crisis is, quote, all manageable, even as lenders are hurt by the property developers' troubles. He says, quote, investors will be stung. That's how it works. And in an interview this morning on Bloomberg Television and Radio, Dalio also talked about China and the broader investment picture.
In China, it is the top-down, and it is an extended family. One of the leaders said to me, for example, it's like, a strict parent. And so when we deal with things like video games, do you want your kids to watch video games? In the United States, we would say that's a parental decision. Generally speaking, it wouldn't be the state to make that. They would say it's terrible what's going on, and the state is going to mandate it.
Bridgewater's Ray Dalio. Again, recapping stocks higher, S&P up 14, a gain now of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So the FOMC, Federal Reserve Open Market Committee, kicking off its two-day meeting today. Decision we know expected tomorrow. Fed officials, Tim, expected to hold interest rates near zero while telegraphing tapering of the Fed's $120 billion in monthly bond purchases in that policy statement that we get at 2 p.m. Wall Street time tomorrow. But of interest, of course, as always, Jay Powell's press conference, what he has to say about some of the concerns on investors' minds, Evergrande, COVID, debt ceilings, inflation, jobs, QE. On that subject, Bridgewater's Ray Dalio caught up with our Tom Keene earlier today, and Dalio saying another round of quantitative easing. Yep, another round, not out of the question.
I think we're going to get another round. Another round of QE.
You're predicting another round of QE?
Not immediately. I think that what happens is you get a taper. I think like every tightening of interest rates has been less than the one before it since 1980. And then when we had zero, then we did QE, and every QE has been larger than the one before it, because we've accumulated so much debt and that we're now printing. I think that you'll have probably one pullback, and then you set the markets down, because the duration of the bond market and the duration of assets is longer. That means interest rate sensitivity is greater. You have that particular correction, and then you'll have another round of that.
Fascinating. Bridgewater's Ray Dalio earlier with our Tom Keene. Let's get another perspective. So glad to have back with us Stephen Skanke, Chief Economic Advisor at Keel Point, former U.S. Treasury and White House National Security Council staff member based in Washington, D.C., and that's where we find him. Steve, good to have you here with Tim and myself. So let's get that perspective. What do you think about another round of QE at some point?
Well, Carol, thanks for having me back. It's always a pleasure to be with you. It certainly is possible that we'll need to have another round of QE, but that isn't going to be what's out of the gate next. The Fed is looking to start its tapering program. The market is expecting that. August showed weak employment growth and moderating inflation, so it's not like they have to do anything. I think it's fair to say that overall the economy hasn't made substantial further progress, which is their touchstone. But they will talk about it. They will try to work out a plan. I believe that they will hint at when it begins. But to the point that Ray Dalio made, they could get into it and find out that they have to reverse course.
Why do you think what tells you, what's the data that you point to when you say that the economy has not made further substantial progress?
Well, just the August employment numbers were far weaker than consensus and certainly what the Fed is looking for. And even the expectation of retail sales, which turned out to be fine, were below what folks need to see that the economy is really getting traction. I mean, it doesn't look like it's collapsing, but it's not creating jobs at a pace that the Fed is needing it to do.
Still millions more to get. Still millions more, Steve, to get back to work. I mean, could we possibly be facing a scenario where not all of those jobs come back and it's a different economy post-pandemic?
I think we're seeing that already, Carol. That it's going to be a different economy. The fact that the unemployment rate is falling, but we still have large numbers of people looking for work. The estimates as to how many people are looking for full-time work in jobs that they would like to have is way beyond the number of people who are listed as unemployed. The fact that we don't have any positive movement in the labor force participation rate means that the growth opportunity is necessarily constrained. The impact of COVID, particularly in the United States, continues to be a big issue. And the government, you can just see, is struggling to see how that's going to get worked out. The moves that the president made a couple of weeks ago were surprising, but I think they point to the level of angst and concern about what has to happen to getting people back into the labor force and back to work and back contributing to productive economic growth.
Does that mismatch between demand for jobs and supply of jobs, does that tell you that we are going to see serious wage increases from employers, and that is a sign that inflation will be here to stay?
We certainly can expect to see significant, meaningful increases in wages to get the people back to work. It seems to be that there's a couple of things going on. One is technical and technology based. There have been some interesting articles on it on how the automation of resume scanning has put a big obstacle in getting resumes of people who would like the jobs actually hired into the jobs. The second thing, the concern about COVID has kept a lot of people whose ballot sheets are just fine from going back into the workplace.
Yeah, we see that a lot. Hey, just got about 45, 50 seconds here. Steve, I wanted to ask you, Evergrande or China remaking its economy, are we likely to hear anything from the Fed on that? And should we, or do you want to hear from the Fed on that?
Well, I certainly don't want to hear from the Fed about that. If we hear from the Fed, it means it's way worse than any of us think it is or ought to be. Wow. I think at the end of the day, that's probably not a big issue for the U.S. economy. It certainly sparked some fear in markets, but I think the good news about Evergrande is that that negative impact gets worked out pretty quickly.
Hey, 30 more seconds really quickly, though. But if China's remaking its economy, or Andy Brown of Bloomberg saying, we may have to get accustomed to much lower growth rates in China, is that something that would ultimately impact the global economy in a big way, and possibly the U.S.? Just quickly.
Yes, it will have a negative impact on global economic growth, but I think not so much on the United States.
You are a gem. Come back soon. Steve Skanke, he is Chief Economic Advisor at Keel Point, former U.S. Treasury and White House National Security Council staff member, based in Washington, D.C. That's where we found him. Taking lots of notes from that.
Yeah, taking lots of notes. I'll always love hearing from Dr. Stephen Skanke. Let's now hear from Nancy Lyons, who's in D.C. Give us an update on world and national news. Hey there, Nance.
Hey,
Tim. President Biden, in his first speech before the United Nations General Assembly, says the world is at an inflection point and needs to build global alliances to face the challenges facing the world, including the pandemic and climate change. He encouraged global competition among rising powers, but did not mention China by name.
We're not seeking, say it again, we are not seeking a new Cold War or a world divided into rigid blocks.
Biden's words of unity come as he faces tough questions from other world leaders about his decision on Afghanistan and his nuclear submarine deal with Australia that cut out France. House Democrats are taking first steps to rein in presidential power. Bloomberg's Nathan Hager has more from Washington.
Democrats are introducing a package of bills today called the Protecting Our Democracy Act. The legislation would make it harder for presidents to do things like offer or grant pardons that appear corrupt, ignore presidential subpoenas, secretly freeze funds that have already been appropriated, and retaliate against inspectors general or whistleblowers. The New York Times reports the bill comes after months of negotiations with the Biden White House to reestablish many of the norms they say were broken under former President Donald Trump. In Washington, I'm Nathan Hager, Bloomberg Radio.
McDonald's says it plans to drastically reduce the plastic in its Happy Meal toys worldwide by 2025. The company, which distributes more than 1 billion toys each year, says the new goal will reduce its use of virgin plastic by 90%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
I have to say I like Happy Meals, or I used to.
Oh, you do?
First of all, even as an
There's
adult,
no age limit. You can get Happy Meals anytime you want, Joe.
That was what was cool. Even as an adult, there was a point, because it was a little burger or a little chicken McNuggets, a little bit of French fries. I don't really do it anymore because I've kind of moved away from most fast food. But there was a time. What?
You can revisit.
I know.
And you know, if there's a
you
special,
can go back, apparently.
If there's a special toy, Carol, that you want in the Happy Meal, you can feel free to get one.
Okay.
Just for the toy.
We're going to actually talk to the Chief Sustainability Officer at McDonald's a little bit later on, so looking forward to that. You shared with me a story. Let's see if we can squeeze in a couple here. Yeah. Katya Dmitrieva and Olivia Rockman putting out a story that employers are like, what is going on? Wait, what? U.S. benefits ending. They expired 2 weeks ago. Employers, though, who expected an increase in job applications, still, Tim, largely waiting for them to roll in.
Right. Economists and companies expected that wave of interest from workers as the financial lifeline was pulled away, hoping it would provide the incentive to get back into the workplace. That hasn't happened. That's according to employers across different industries that Olivia and Katya spoke to.
We hear it from CEOs that we have on, and it'll be interesting to see what comes out in the Fed tomorrow in their statement, but also in the Q&A with Jay Powell about, we just talked about with Steve Skanke, it doesn't quite make sense. We know there's tons of job openings.
But look, I think you brought up a really good point, and you can't really, I don't want to say you can't, but we have to perhaps consider that there might be a different yardstick that we have to use, right? Did this push people who were a few years away from retiring out of the labor force?
I know people who just said, okay, I'm done. I'm not going to go back to work. I can afford to retire at this point. Maybe it's a little bit earlier than I planned to, but I'm done.
So do we change the metric? Do we not try to recover all those jobs? Do those jobs ever come back?
And that's where you get to labor participation. What is truly now the pool of available workers? And then do you wonder, is there not enough for hiring to fill jobs, and what will that do to economic growth?
That's the question.
Right. Does it slow down? We're going to have to skip the other story. Maybe we'll get to it later on. It's actually the most read on the Bloomberg.
Yeah, check it out at
There's
Bloomberg Terminal.
There's a teaser, or just wait. Maybe we'll talk about it. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Choppy Tuesday here right now. The Dow, the S&P, NASDAQ, they are all advancing. Let's head right over to the first word breaking news desk for today's afternoon call. He's got his eyes on the market. Here he is, Bill Maloney.
And good afternoon, Charlie. A modest bounce for stocks after yesterday's sell-off, with the Dow currently up 88 points. S&Ps are up 15, and NASDAQ rises by 100. The U.S. 10-year yield at 1.32%. Gold is up 11. Transports were a little changed. And among the main 11 S&P sectors, only industrials were in the red. Leaders to the upside in the Dow, American Express and Home Depot, while Disney and Dow Inc. led to the downside. And speaking of Disney, shares plunged intraday after the CEO said that Disney Plus subscriber growth to slow in the September quarter. In other news, Alcoa's CFO said it's seeing the strongest market dynamics in 20 years. And wrapping things up, FedEx reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Well, New York City streets a little bit busier than usual because the UN General Assembly is underway this morning. President Biden giving his first speech as U.S. President to the UN General Assembly. So that speech made against a backdrop of a lot of stuff going on.
Yeah, it certainly did. I mean, not to mention a global pandemic, everything that's happening in Afghanistan, and the president certainly wanted to move
weeks for him.
Beyond that as well.
All right, let's bring in our Bloomberg News National Security Team Leader, Bill Ferry's in the house. So excited to have him here in our Interactive Brokers studio. So how'd the president do?
Well, you know, I think President Biden delivered the speech that a lot of people would have expected from him. You know, it was the America's back. We want to work with alliances. We are here to be partners. That said, as you mentioned, he's got some ground to make up for now because in the last, just the last few weeks alone, we've seen the rushed withdrawal from Afghanistan, which took a lot of allies by surprise. We've seen the situation with the French and the Australians over these nuclear-powered submarines, which ruffled and continue to ruffle a lot of feathers in France and also with some other countries. And
I thought he was going to be the president that that was going to kind of reignite those alliances after President Trump.
You wonder is there something going on in terms of communicating with allies, or do they just think, maybe Europe isn't, where our focus is and you aren't going to reach out? Boris Johnson yesterday seemed to be taken by surprise when the U.S. announced the easing of travel restrictions. He had just told reporters, we don't think this is coming anytime soon, and then the White House announcements dropped. So it's a valid question, sort of what's happening behind the scenes here.
Wouldn't it be fair to ask if Trump's move to America first, there is some still legacy remaining from that?
Well, I think a lot of allies are wondering that themselves, whether the U.S. is really doing all it can to reach out to allies to coordinate, particularly on Afghanistan, where obviously you have lives on the line, and you have people who worked with the NATO and U.S. forces still stuck behind. You still have some Americans there. Certainly, there's a sense that if you're talking to allies about this, maybe you're not talking to them about it soon enough, or in the right way, because it's just what we've seen the last 6 weeks has raised a lot of questions.
So is it just, oops, I made a mistake, I'm going to fix it, going back, or is it, oops, no, this is actually what I wanted to do?
3 times now.
I know.
3 times in
That's
recent
what I'm
weeks.
Saying. Is there a trend line here in terms
it's
of
the
behavior?
question we're trying to put into the administration is literally, how, if there's something breaking down, what is it and how do you fix it? If it's not something breaking down, what is the ultimate message here?
Right. What's the new policy?
Well, what's the answer you're hearing from the administration right now?
Well, they say, listen, we don't surprise allies. We talk to them. The French were aware that this was coming. The French deny that. They say basically they were seeing news reports and having to send their foreign minister and their ambassador in for briefings. Afghanistan obviously fell apart faster than the U.S. ever expected it to. But there was still clearly some thinking that maybe troops would stay outside the perimeter. Maybe they would stay longer. Maybe they would extend that withdrawal deadline. None of that happened. I think from the administration's perspective, in some ways, they want to get this focus on Asia as quickly as possible. And they're hitting some road bumps along the way, but that's the goal.
This is going to be, no doubt, by the end of the year, I'm thinking about, as we all do like our summaries, China is such a big, big story. And we know they think in long-term perspectives. They are definitely remaking their economy. We've talked with Andy Brown of Bloomberg New Economy, and that means new regulations, and it is going to have an economic impact and a geopolitical impact, perhaps. Is it the U.S. really having its sights on China and doing whatever it needs to do to kind of position itself in the strongest way? Maybe that's going to tick off what some would say is maybe the Europeans haven't been as aggressive against China.
Right. From the U.S. perspective, you've had administrations talking for 15 years about this pivot to Asia, right? And it's never happened. The Middle East continued to suck up a lot of the energy on foreign policy. I do think there's this attitude within the Biden administration of, hey, we'll have to just rip off the Band-Aid here. There's going to be some missteps anytime you're making a transition, but the China issue is really the imperative now. It's trade, it's national security, it's technology. So we have to get there as soon as possible. And yeah, it's probably going to make for some rough diplomacy at times, but it's worth it.
But Bill, France, we've all seen Hamilton. They're so important to us.
Our oldest ally, literally our oldest ally.
I mean, you have to think about that a little bit, right?
Yeah. And, listen, there's a French context to this too, right? Macron has elections he's thinking about for next year. So in some ways, it pays for him politically with the domestic audience to bash on about, American mistreatment.
Hey, just want to end with talking climate change here because I know that was a big part of the president's speech, and make sure to touch on that. What did we learn about the United States' commitment to help other countries when it comes to the warming planet?
So that was a key point of President Biden's speech. He said the U.S. is going to double its financial support to about $11 to $12 billion for developing countries to help them address climate change. That should get the world closer to this $100 billion annual goal. The big question, as we know in Washington, is can President Biden get that through Congress? I mean, he needs their approval to spend that money, and we've seen the challenges the administration's having on spending bills right now.
Is there one world leader right now who you think is really the guiding light right now? Just got about 30 seconds.
It's a fractured world. I think you see it. You see the U.S.-China divide. You see the U.S. responding to things China does, and China now with the sub deal having to respond to what the U.S. is doing. It's definitely a bipolar world at this point.
So great to have you here. Thank you so much. Welcome anytime. Bill Ferries, he's National Security Team Leader at Bloomberg News here in our Interactive Brokers studio. Check him out at Bill Ferries on Twitter.
Yeah, Bill, come back anytime. We're here
all week.
Okay, he's here all week. Oh, that's
You're
great.
welcome. So much going on. We're going to continue our coverage here. Coming up next, the chart of the day with Dave Wilson. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I still feel like I have a Monday brain. What day is it? It's Tuesday.
It's Tuesday, yeah. It's Tuesday, Carol. And it's a good Tuesday.
It's Fed Decision Eve.
Yeah. Well, we're going to hear from Fed Chair Jay Powell tomorrow. And you know who we're going to hear from in a few minutes?
Dun, 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 dun.
Dave Wilson.
Yep. He's got his own cape. Did you know Dave Wilson has a cape?
I didn't know that.
Yeah, it's got a big DW on the back. No, it
I'll have
doesn't.
to check that out.
All right, let's get back to Charlie Pellet. Charlie Pellet, do you have your own cape?
Of course I do. We're flying right in right now, and here's what's going on. We have got the Dow, the S&P, NASDAQ showing strength of steel right now, with the S&P up 16, higher by 0.4% right now. The Dow higher as well, up 94. Been a tough day for U.S. equities, swinging between gains and losses. Choppy session with the Dow up now by 0.3%, and we have got NASDAQ higher by 99 points, up now by about 0.7%. Shares of the Walt Disney Company today weighing on the Dow Jones Industrial Average. Disney says COVID production delays will slow subscriber growth. Right now, the Walt Disney Company is down by 3.3%. 10-year yield 1.32%, down 0.4%. Gold, spot gold up 6 cents now, $17.75 the ounce. West Texas Intermediate crude up 0.4%, $70.56 a barrel. Stocks turned higher. We've got just about 28 minutes to go. Traders are assessing risks from China's crackdown on the real estate sector. They're also looking ahead to tomorrow's Fed decision. I should mention complete Fed coverage right here on Bloomberg Radio. And, of course, we will have the news conference for you live. Two sources tell Bloomberg the FDA is expected to decide as soon as tomorrow on a recommendation for COVID-19 boosters made by Pfizer and BioNTech, the latest step in a process that could open the door to extra shots in coming days. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
There are some people who have argued that maybe the Johnson & Johnson vaccine should be a two-dose vaccine, just like the Pfizer, the Moderna, the AstraZeneca. And this is data showing that perhaps that is the case, that the protection, which is still very strong against severe disease that you get with one dose of Johnson & Johnson, can be increased by making it a two-dose regimen. We'll have to see what the actual data shows. We'll have to see what Johnson & Johnson plans to do in terms of going to the FDA to either modify their vaccine to make it a two-dose shot or to say we need boosters at a certain period of time. But again, this is a debate that will play out over time.
And Dr. Adalja is with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares, they're down now by 0.3%. German partner BioNTech up now by just about 1.4%. AstraZeneca shares, they are pushing higher. The ADR is there, up now by 1.2%. And Moderna higher now by 3.3%. And this headline from the Bloomberg Professional Service, China's President Xi says China will stop building new coal-fired power projects abroad. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg. This is this is like the last song that they play in high school, where you're, at the last high school dance before graduation, right?
That is so true.
It is. This is like the prom song, Dave Wilson.
There's a couple of Billy Joel songs that you could definitely.
So is he back?
Is he back in the garden?
I think he's coming back.
I did
look.
see an ad. Yeah. I saw an ad, so I think he's like getting ready to come back. Have you been to the show?
I was there once to say that I did it.
Everybody's supposed to go once, and then when everybody's done going once, he stops.
Oh, is that the deal?
Yeah, it's the deal, right?
I have to say it was one of the best concerts.
I mean, that's not not really the deal, but it's something similar to that, right? He's going to go until demand falls off.
That's the basic concept as I understand it. By the way, I'm waiting for a song title, folks.
Now is the time?
Nah, you're close.
Time to remember?
This is the time.
We were so close.
Yeah, that's what I figured. And so that's why I picked it, because it kind of fits with the chart. This is a time you have to wonder what's going to happen when you look at the S&P 500 relative to inflation. Now, what we're talking about here is a real earnings yield, real as in inflation adjusted Earnings yield, think of that as the opposite of the price-earnings ratio on stocks. So if you're at 26 and change times earnings, which is where we are now, it works out to an earnings yield of 3.8%. But bear in mind, you've got 5% plus inflation if you look at the consumer price index over the last 12 months.
So now we got a minus number.
Yeah, in fact, we've had a similar minus number now since April. Really, you're talking about negative 1.6%. We've been in that range. You know, point here and a point there in terms of, you know, movement, but not much, actually. And it's based, the chart's based on monthly data because, of course, you only get the CPI figures monthly. So, you know, it's the easiest way to compare them. And when you look at that minus 1.6%, you haven't seen a figure like that since 1980. In fact, you only have to fall about another half percentage point to get back to where you were at the lows of 1974. And both periods, you had recessions. So clearly, this is a different kind of situation we're in now, arguably, because, you know, there's no talk of a recession at this point, and yet you've got negative real yield. So, you know, it's a matter of whether that turns, and you know, you get enough days like yesterday, I suppose it's something you could look forward to. In any case, if you want to see this chart, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So I look at the chart, Dave, and I see other drops of this magnitude. You mentioned 70 to 74 in 74. You mentioned the early 1980s, specifically 1980. What is different about this time that's not happening? It's that there isn't a recession that we're in, but there are still concerns about inflation, and there's concerns about economic growth.
Yeah, absolutely. So, you know, who knows how things unfold from here, but at the very least, we're not quite in the same position that we know of, at least, as we were back then. But then again, we haven't seen inflation like this in decades either, so I suppose that's the key point.
We haven't said transitory yet. We haven't said transitory.
Well, that's the bigger issue.
Yeah.
I mean, because there are lots of things that can happen. Share prices can change or the inflation rate can come down. Certainly the Fed would like to see the latter.
All right, stock of the day, sir. What do you got?
Americold Realty Trust.
Okay.
The ticker is cold.
Nice.
Makes sense, C-O-L-D.
One of those coveted tickers.
Yeah, you could say that. I mean, the company owns what they call temperature-controlled warehouses. So, you know, if you're going to store your food someplace, obviously you want to keep it from spoiling. So, you know, you might use one of their facilities. Now, there's this indicator with real estate investment trust. It's an alternative to earnings that people pay attention to called funds from operations. Well, it turns out that the company cut its full-year estimate for that gauge to reflect unprecedented labor disruptions. So they've had issues with staffing. And, you know, so have
talking about earlier.
Yeah, so have food makers, and that's another piece of the puzzle. In any case, Americold at the moment down about 7.5%, headed for its biggest loss since March of last year.
Check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at @TheOneDave. Dave Wilson, thank you.
Billy Joel back in the garden on November 5th.
Okay, there he is.
Just so in case you want to get tickets.
There it is.
Nancy Lyons, do you want to get tickets?
Yeah, I love him.
All right, come on
I
up,
have
go.
seen him in concert years ago.
He's great.
Yeah, he's great. The House is set to vote this afternoon on legislation to fund the government, provide federal disaster aid, and suspend the government's debt limit. Democratic Congressman Henry Cuellar talked with Bloomberg about his vote.
I'm an appropriator, so we have to do this. I certainly don't want to see a government shutdown, number one. Number two, on the debt ceiling, as you know, this is something that there will be severe repercussions to the U.S. economy, and so I definitely need to, we all need to do this.
You can hear more from Congressman Cuellar this afternoon on Bloomberg Sound On at 5 p.m. Wall Street time here on Bloomberg Radio. President Biden is rallying the global community, telling the UN General Assembly today that countries must unite to overcome challenges like the COVID-19 pandemic and climate change.
We stand, in my view, at an inflection point in history.
Biden told leaders they all suffer the consequences of failure if they do not come together. But that olive branch comes as some foreign leaders are upset with Biden over the hasty withdrawal of American troops from Afghanistan And France is outraged over a new defense alliance that calls for the U.S. and the U.K. to provide nuclear-powered submarines to Australia. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. So this story is among our most read on the Bloomberg terminal today. Google, this is according to Dow Jones, Wall Street Journal, making a purchase.
I thought workers weren't coming back. I thought, working in offices was dead. I thought New York City was dead.
Yeah.
But Google plopping down $2.1 billion for an office building here in Manhattan. And it is the most expensive sale, according to Dow Jones, of a single U.S. office building since the start of the pandemic.
And Google, this story also, our Bloomberg News team reporting on it as well. So they're cementing their status in New York City, commitment to in-person work, and as Tim mentioned, buying that building for $2.1. Of course, the parent is Alphabet. They've been leasing St. John's Terminal on the Far West Side. The decision to exercise an option to actually buy the site builds on plans to invest more than $250 million this year in its New York real estate. This is coming from CFO Ruth Porat. She put this out in a blog post today.
Okay, so Google first set up shop more than 20 years ago here in New York City. It now has 12,000 employees in the city, its largest office presence outside of California. The company aims to increase its New York-based workforce to more than 14,000 in the coming years. Buying St. John's Terminal at 550 Washington Street and Hudson Square also fits in with Google's commitment to racial equity, according to the company, which includes expanding in diverse communities, according to Ruth Porat, the CFO.
Go back a few years, right, when we started to really see the tech scene come into New York increasingly, and it has definitely increased its presence. And so you've got Google, you've got other major U.S. tech companies. Facebook has been growing also its real estate presence and its employment presence here in New York City. By the way, Google owns several buildings in the Chelsea neighborhood, and its 1.7 million square foot Hudson Square campus serves as its New York headquarters for global business, which includes sales and partnership teams. So it's a real presence.
A big part of it is talent, where they think they can find the talent.
That's a good point.
New York City still has that, and people still want to live in New York, Carol.
Yeah, exactly. Remember when everybody said, oh, yeah.
I do.
They're all going to move away?
We defended it.
We did defend it. You're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P fading into the close here, still holding on to a 7-point gain. 13 minutes to go ahead of the closing bell. But right now, and I emphasize right now, green on the screen. Stick around to see how things shake out when we do get that closing bell. The Dow up 33 points now, higher by 0.1%. Very choppy day. NASDAQ up 64, higher by 0.4%. 10-year down 3/32, 10-year yield 1.32%. Spot gold up 0.6%. 17.74 the ounce. West Texas Intermediate crude up 0.4% right now. WTI 70.56 a barrel. Lots going on. Stocks turning higher as traders assess risks from China's crackdown on the real estate industry. Investors are also looking ahead to tomorrow's Federal Reserve meeting. After the bell, lots of key earnings. FedEx up now by 0.8%. Adobe up by 0.9%. Stitch Fix shares trading lower by 1.8%. Again, recapping, equities higher. S&P up 6, up by 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Yes, it is. Thank you so much, Charlie. Well, it is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Makers and sellers of prescription painkillers will soon begin paying out billions of dollars to settle opioid epidemic lawsuits. The amounts are large, except when measured against more than 500,000 lives lost this century to overdose, or the tens of billions that governments spend each year to address the painkiller, heroin, fentanyl scourge. This money should be applied to preventing and treating addiction. The task requires a dedicated fund. States shouldn't divert the cash to plug holes in their budgets, as they have with money they've received from tobacco litigation. And it's not enough to sustain current substance use disorder programs. They must be improved and expanded. Wherever these initiatives are tried, tracking their success or failure is essential, and the data should be made public so lessons can be learned. Windfalls from state opioid lawsuits will arrive at a time of unprecedented need. States mustn't waste the opportunity. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session. We have been bouncing around. We're off our highs and lows of this session. Green on the screen, though, with those major equity averages, but little changes, in particular for the Dow and the S&P. NASDAQ up 0.4%, as we heard from Charlie. Biggest gain there among those major equity averages. Let's get to it. Drive to the close with Eric Schoenstein. He is Managing Director, Portfolio Manager at Jensen Investment Management. They've got more than $13.4 billion in assets under management. Among the funds that he helps manage, the Jensen Quality Growth Fund, which, Tim, is beating most of its peers in the past 3 years, up nearly 14% on average annually, according to Bloomberg data. Eric, good to have you here. What's front and center for you?
Well, first and foremost, thank you for having me.
Sure.
Front and center for us as an investment team, probably trying to parse through, as I'm sure many of your investing folks are, is trying to parse through all the various risks and how they're going to impact companies, impact the economy, and what that means for our investment strategy. The good news is for us is our investment strategy has always been focused on what we consider to be high quality companies that are frankly resilient in the face of risk, and so we think our companies are built to handle them. But nonetheless, risk assessment, I think, is what is front and center right now.
Well, yeah, and I think China also front and center. I wonder, these high quality companies, many of them do business, I assume, in China. I mean, think about Apple, for example, and the kind of business that Apple does in China. I'm wondering how you, Eric, weigh China risk right now.
Well, it's certainly one of the elements that needs to be weighed. I think we have you can certainly say we have geopolitical risk as something that needs to be considered now, perhaps in ways that it didn't need to be considered a few years ago.
Why do you say that? Because we've gone through, 9/11. We've gone through some really serious stuff over the last 2 decades or so. So what's different now? Is it just the China story that's the geopolitical, or what's the geopolitical?
No, I think, what I was referring to really is more the China story. I mean, geopolitical in terms of, terrorist activity and some of the other things that have happened, yes, and those are things that should be considered. But I think from the standpoint of how, trading partners and China's growth as an economy, growth as a nation that is more formidable, they're certainly trying to play a larger part on the world stage, and that has real impact on every company that does business in China, and certainly the ones we invest in are not immune to that. I think that a bit of the difference for us from our perspective would be that, these are multinational companies, and so I don't know that we're necessarily in a position where China would be, the largest part of any one of these businesses or their revenue streams, and so there's some level of insulation, but nonetheless, it's just one of the many things that we have to be thinking about, both domestically as well as globally, in terms of the impact on our business.
Well, I take it you're not invested in casinos that have a large portion of operations in Macau? Because some of those companies...
Typically, the casino side of things doesn't meet our screen. Our screen, because of the consistency and quality, means that companies for us have to generate a 15% return on equity every year for 10 consecutive years at a minimum, which means their business return is consistently above their cost of capital. And casinos are a lot of fun, but they don't necessarily meet that criteria for us.
So, Eric, how do you read into what happened yesterday in the markets and whether or not we see this as a signal, or you see this as a signal, that there could be a further pullback ahead?
I think what happened yesterday is emblematic of the fact that the market's searching for something to help direct it. And, we've got a lot of moving parts, everything from what is the Fed going to do to what kind of tax legislation is going to be out there to what kind of spending. How are we going to treat the fact that we're going to have a fairly large gap in terms of, economic stimulus from what was provided this year to what's provided next year? And all of that creates a bit more of a troublesome direction in terms of trying to think about where things are headed. And so any event like what happened yesterday with China can become a catalyst for volatility. And I think that's what we're probably facing in the times in the weeks and months ahead, is the potential for higher volatility. Mm-hmm. The antidote to us for higher volatility is to look for companies that are less variable in their business performance, and that speaks to our high-quality investing style.
All right, so you have to pick names, and you do pick names for the funds that you manage and help manage. Mm-hmm. I mentioned the Jensen Quality Growth Fund, which is got a bunch of investments in names like Apple, Microsoft, PepsiCo. There's the Jensen Quality Value Fund that I think I mentioned in terms of the performance. That's invested in things like, I think, Crown and Hasbro, Equifax. Tell me, how are you picking names right now? Are you finding lots of opportunities?
We actually are still finding good opportunities. I think the reality is that, everything that happened last year from a momentum perspective was really focused on, concentrated on very large companies and just a few stocks. The average company was mostly left behind. And from a valuation perspective, even in the last month or so, we've seen the average stock probably drop in double digits, 12% or so. And so
that's an opportunity.
From a valuation perspective, that presents opportunity. I think the key, though, for us is it's not strictly about valuation discipline. It also has to be a very strong fundamental opportunity, and that's where you can see, in our portfolio, you mentioned the Quality Growth Fund, for instance, you can see a Microsoft alongside a Pepsi. Now, clearly, there are different growth rates. There are also different valuation opportunities, but our focus is to try to find 25 to 30 really great combinations of fundamental strength and valuation opportunity to comprise the portfolio. And the same thing would be true in the value strategy, although it's a little bit larger, 25 to 40 companies, and a little bit smaller in cap. But in every case, the pillar of fundamental strength, based on high business returns against their cost of capital. And then the valuation opportunity is really what drives us.
All right. Listen, thanks. Great to check in with you. Eric Schoenstein, Managing Director, Portfolio Manager, Jensen Investment Management. I did mention fund performance before. It's the Jensen Quality Growth Value Fund, which is beating most of its peers in the past 3 years, up nearly 14% on average annually. So I just wanted to make sure that I was clear about that. All right. TikTok, about 3.5 minutes left in today's trading session, Tim. We have bounced around a bit.
Yeah, we have bounced around a little bit. Look, I thought that stocks were going to end the day at least in positive territory, but we are racing the gains. We're up fractionally right now, Carol, and 0.6% on the S&P.
Feels like a lot of unchanged might be as we get to the closing bell. Just the S&P up about 2 right now and fractionally higher on the Dow. All right, coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, on Bloomberg TV, and on YouTube, counting you down to the close on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. Our global simulcast, Carol Massar, Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audience to parse the crucial moments of the day. And of course, guys, coming off of what yesterday, of course, was the biggest sell-off we've seen going back into May. We saw a little bit of dip buying, but that enthusiasm seems to be fading as we get closer to the bell.
Yeah, absolutely. Moving down here in the last few minutes. So we're going to really see very little movement on some of those major equity averages. What's interesting, Romaine and team, it feels like I just looked at the S&P and the Dow and the NASDAQ, and we really had about 1% from peak to trough today in the moves here. But again, as we get closer to that closing bell, Tim, not going to have too much movement here.
Yeah, look, I thought that on a day like today where we did see a little bit of buying at the beginning of the day, and then toward the end of the day we saw the S&P 500 moving higher. I thought it would continue to move higher. We'd see a little bit of dip buying come back at the end of the day, but that's not indeed the case that we're seeing today, looking like the S&P 500 is going to finish almost unchanged.
I feel like commodities with the tail again. We just had all down throughout the day, Bloomberg Commodity Index, and sort of that shone a light on some of the worries, the nervousness in this market, whether it be China, whether they look ahead to the Fed tomorrow.
What's so interesting, though, Caroline, is when we look for signals and cues cross-asset, at least within the bond market, unch on the day. You had, of course, a big rally remain on bonds yesterday with yields lower, but today not confirming perhaps maybe in any direction.
Yeah, absolutely. And we should just point out here, too, I mean, the drag that we're seeing on the S&P 500, that's coming primarily from Disney, which is now down about 4%. You have Apple, Tesla, Microsoft, Facebook, Alphabet, all the names you want to see in the green. They're in the green here, but you also have a lot of big heavyweights in the red. That's one reason why you're seeing the S&P 500 dip into the red as you get those closing bells. Right now it's
cheering
down.
there, aren't they?
They're cheering. Well, they're supposed to cheer no matter what. They're happy about something. I don't know who these people
Romaine,
are.
maybe that's a drum, not a bell.
Well, they're living vicarious. Vicarious Surgical there, and Greenwich, are ringing the bell over there at the NASDAQ here. Confetti is falling for our radio audiences here. There is confetti for the NASDAQ. The NASDAQ composite up 32 points, or about 0.2%. The S&P 500 looks like it's going to finish in the red, less than 0.1% in the hole, down about 3.6%, down 3.6 points, I should say. The Dow Jones Industrial Average down 48 points, or about 0.1% as well. The Russell 2000 going to squeak out a modest gain on the day, up about 4 points, or 0.2%.
A lot of hugging there at the New York Stock Exchange. Just going to point that out. All right, S&P 500. You know, for some context, Dave Wilson was talking about this earlier on air with us. You had 331 names down, 171 higher. So that gives you some feel in terms of the internals of the market today. And Taylor, 3 unchanged. So certainly more of a risk-off trade ultimately by the close here.
Yeah, and you certainly see that for the radio audience when we have the sector winners and losers. Yesterday, there was a lot of losers within the winners category. Today, there's only about 2 losers within the winners category. So let me give you a few sectors that still were green on the day. Some of this is a reflationary trade. If it's autos, it's energy. You're up 0.4 to almost 1%. You have some household products, though, in there, and some food and staples, which gives you that hint of defensiveness. But you go down to the bottom of the screen, and I have to say, you know, Carol, I think you were correct in pointing out how sort of broad-based this feels. It's financials, it's media, it's food and beverage, it's telecom. So it's sort of that reflationary as well as perhaps maybe some of that defensionary trade.
Yeah, it's kind of like investors saying.
Defensive.
I'm trying to get my words out.
I knew what you meant.
Hey, I've been there. It can be tricky. I get it. Let's talk about some of the gainers today. See, there we go. Twitter up about 3% here at the close. Could be that the ride-hailing giant finally which posted a quarterly loss of about $5.2 billion, maybe about to turn an adjusted profit. Company saying in a filing adjusted earnings before interest
Adjusted?
taxes.
What does that sound like?
That's not community adjusted.
Don't you love that? I wish I could
Can I
just
just,
back
like,
out.
adjust my income
I
and-
know.
yeah.
Wouldn't you like to just back out all this stuff when we do things? Well, anyway.
Yeah, just write things off.
I know. I mean, wait a minute. Okay, so adjusted earnings for Uber, they may range from $25 million loss to a $25 million profit in the third quarter. So there's some optimism about that maybe it's happening earlier than everybody expected. Do also want to mention, that was Uber, right? Okay, Twitter, they are up almost 3% here at the close. They paid or planning to pay a $810 million settlement, settling a shareholder class action lawsuit, and that has made the stock move higher. Suit accused the company of painting an overly rosy picture of its future.
Yeah.
They did not. This is another one. It concluded without any admission of fault or wrongdoing by Twitter, but I'll pay $810 million.
Yeah.
I always wonder. Last one, CGen, I just want to mention, it was top of the NASDAQ 100. I mentioned it yesterday, up another 3.7% today. This after its TIVDAC won accelerated approval about 3 weeks earlier than an FDA deadline. We kind of gave a highlight of this yesterday about some of the biotech names that might be moving because of FDA approval.
Yeah, and just real quickly before you go on, Tim, I just wanted to point out these American airline JetBlue headlines that crossed the wire just a little bit ago. This is on the Department of Justice challenging that alliance that the two had here. We kind of knew this earlier in the day. Dow Jones reported it, is now being confirmed here. The DOJ basically saying that it and states have filed suit now to block this deal. Basically, it's an alliance. It's kind of complicated. Basically, they swap slots at various airports. Southwest and some other airlines complained about it. Some antitrust issues raised. Now lawsuits filed. Tim,
yes,
declining.
Look, stock moving not significantly in after-hours trading. As you mentioned, it was priced in. We learned earlier from Dow Jones about it, but now it's official. Hey, you got the gainers, Carol. I got the decliners. Let's start with Disney. Shares lower on the day after the company's CEO, Bob Chapek, said that we should expect growth in Disney Plus users to slow down. Of course, Disney Plus is the core as far as what people are thinking about the transition to streaming for the company. This because of the Delta variant and the rise of the Delta variant. The company has dozens of movies and TV shows that it's not able to move forward with, at least at the earlier timeline, as a result of this. Activision Blizzard shares also under pressure today. This after the company yesterday, shares were down more than 4%, extending yesterday's drop of more than 4%. The company said it was subpoenaed by the SEC. And then DraftKings finishing the day down by 7.4% after the $22.4 billion bid for Entain.
All right, speaking of decliners, here's one in the after hours already, down 2.5%. FedEx coming out, and it's all about its outlook. First quarter adjusted EPS of $4.37. Hang on a second, guys, I just lost it. First quarter adjusted EPS $4.37. The estimate was for $4.92, so that's significantly lower than what everyone was anticipating. So cutting its year outlook, that stock again down 2.8%. We want to see what these companies are doing. These transportation companies, we know FedEx came out yesterday raising rates.
Did you see
they
the
said
operating margin?
Yeah, well. Yeah, what is it?
6.8%. The street was looking for 8.5.
And this is
That's a big
why?
point.
Because
That's
the
the big
labor
concern.
availability, you go into the press release, negatively affected by an estimated 450 million year-on-year increase in costs, constrained labor market, impacted by labor availability, network inefficiencies, higher wage rates, increased purchase transportation expenses. Here is the COVID supply chain issue front and center for FedEx.
Well, and they warned about this yesterday. Tim and I were talking about it earlier. They talked about a challenging operating environment, right, Tim? And they said that they're going to be raising their rates the most in a decade.
You're raising their rates the most in a decade and across all services as well, Taylor. Just another headline here, the first quarter adjusted EPS coming in at $4.37, lower than estimates, cutting its year outlook for FedEx, Taylor.
Yeah, you know, it's very interesting as we talked about raising those rates, as you mentioned, the highest going back since 2011, on average by 5.9%. Dare we remind our audience when we talk about the Federal Reserve meeting tomorrow, once you raise those prices, that doesn't sound transitory. You can't really bring those prices back down. And 5.9%, Romaine, certainly sounds higher than, of course, maybe some others were expecting. So they're talking a lot about their operating results being declined, of course, due to these higher expenses. Like Caroline was saying, the staffing challenges, the air network impacts, and it is an international issue. It is a U.S. domestic express package packages issue as well.
Yeah, and we're going to get back to that in a second. Adobe earnings are crossing the wire. Of course, you know it for Photoshop and that big creative suite that they have. Their fiscal 4Q revenue coming in pretty much on the nose, $4.07 billion. But some of the other numbers here, it's kind of a mixed bag here. I'm going to be careful with some of these numbers here, but they do appear to miss, including their digital media ARR, which is said to be about $550 million. Based on the Bloomberg headlines, it says the street was looking for something a lot more than that. Also, we should point out the digital experience segment revenue grew about 22%, and the subscription revenue on the digital experience grew about 26%. Now, this is pretty significant here because the street was looking for something just a little bit stronger than that. Some of these comparisons are going to be a little bit tricky, but overall, they beat on some of the top line numbers here, but on some of the segment revenue, they appear to be coming in just a little bit weaker than what the street was looking for.
And to be fair, the stock's up about 29% so far this year. So again, I always think about when we've had a run up, the expectations maybe are a little bit high here. So that when there's even maybe slight disappointments here, you're going to see that trade move a little bit lower. And we're definitely seeing that in the after hours here.
Stitch Fix earnings out too.
Yeah, gaining 3% after hours, fourth quarter profit topping estimates. So clearly we're all at home and still wanting our clothes delivered, it would seem. And so not wanting to get a
which costs them
FedEx, which then cost them a little bit. I had my Rent the Runway delivered yesterday, a new type of delivery going to New Pessimist. What did I get? I got a couple of dresses and neither of them fit, so I'm sending them back, sadly. But
that's why shipping costs are so high.
But exactly. Stitch Fix sees at least 50% year-on-year net revenue growth for the full year 2020. So still some disruption when it comes to the way in which we order our clothes.
All right, earnings, and let's not forget, of course, we've got that Fed meeting tomorrow. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You know, I feel a little bit out of the earnings thing because we kind of got through them all, and it's a reminder that not everybody's out.
Not everybody's out, Carol, and as soon as we wrap up this week, we're already going to be thinking about what happens after the September quarter ends.
It'll be important because the market and investors are going to be looking for some direction. But FedEx
big. That's big.
Right? Down 2.2% here. But you really caught it in terms of yesterday them coming out and talking about raising rates.
Yeah, they did telegraph this to a certain extent, but at the same time, the labor shortage, the labor troubles that they're having, you've seen across the industry.
Yeah, right. And that supply chain on a lot of different levels certainly being felt by companies. All right, more to come. First of all, though, let's get to World and National News and back to Nancy Lyons in D.C. Hey, Nancy.
Hey, Carol. Senators have been asking some tough questions today to Homeland Security Secretary Alejandro Mayorkas concerning the thousands of migrants in Del Rio, Texas, who are being held under a bridge in tough conditions. Senator Josh Hawley pressed Secretary Mayorkas on that situation.
Do you bear responsibility for the humanitarian crisis in Del Rio? Yes or no?
Senator, it is my responsibility to address the human tragedy in Del Rio, to address that, and we are doing so.
Mayorkas did condemn the actions of border agents seen chasing away Haitian migrants. He says the agency is doing a thorough investigation. FBI Director Christopher Wray says his agency is seeing a substantial increase in the number of domestic terrorism cases.
The domestic violent extremist bucket has been going up quite significantly over the last few years, which is why we're now at 2,700 domestic terrorism investigations, when if you went back 2.5 years ago, we were probably at more about 1,000. So it's been a really significant jump.
Ray says the good news is that the FBI's recruiting has gone up exorbitantly. He appeared before senators today to provide an assessment on the current U.S. threats. We've been hearing of shortages of COVID-19 tests, with schools and offices scooping them up to prevent COVID-19 outbreaks. A DHS official says the federal government is moving to fix the problem by spending nearly $1.2 billion to purchase 187 million rapid tests from Abbott Labs and Celltrion. The deals, which include options to buy more, are part of an investment in testing of about $2 billion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Carol Masser live in the Bloomberg Interactive Broker Studio in New York. Sometimes during the breaks, Carol and I are like a little arguing
Not doing this.
about which story we want to hit on, because there are so many stories that we want to go with. Carol, I'm going to defer to you.
Okay,
and you're the one who's going to make Ari angry
Yeah.
because he has a certain one plan. Look, let's do tech millionaires.
All right, let's
okay?
do tech millionaires.
I'm
Let's
not
keep
gonna
Ari
defer to you. We're
happy.
gonna keep Ari happy.
Yeah, you know, he can get pretty
But-
angry.
but
He kind of
there's
gets
gonna be
Hulk
another story
angry,
that we're
you know,
gonna
when he
hit.
comes through the studio.
At 41 past.
Doesn't turn green,
At
though.
41 past,
Yes.
we're doing another story.
Yeah, which is just popped on the Bloomberg and has certainly caught our attention. All right, so this story we want to mention by Ben Steverman and Katsuva Basu. Silicon Valley waking up last week to a surprise, a tax break that lets the tech industry's millionaires and billionaires shield their winnings from the IRS. That's being targeted by the Democrats in Washington. Thank you.
QSBS. If you know, you know, Carol.
You sound so cool
If
when
you
you do
know,
that.
you know, the qualified small business stock. It's in the tax code.
Yeah.
It benefits venture capital-backed startups, certain venture capital-backed startups, not all of them, in technology and other industries that are aiming to get very big very quickly. So if these young companies go public or if they get acquired, holders of their QSBS pay no capital gains taxes on windfalls of $10 million, or in some cases even more. And despite its name, the vast majority of small businesses can never even qualify for the tax break.
Wait, what?
Yeah.
The tax proposal approved by the House Ways and Means Committee last week wouldn't kill off QSBS entirely. Instead, it would cut in half the amount that QSBS can exclude from taxes. To critics, QSBS is expensive and unnecessary, a reward for investment that would have happened anyway, and one that benefits some of the richest people in the world, many of whom supported Joe Biden's presidential bid and the Democratic takeover of Congress. You know what this really speaks to? We are potentially seeing some significant overhauls, whether it's on buybacks, whether it's on tech millionaires, like a lot of things could change.
I think the key word you said is potentially.
Correct.
And it still needs to completely get through Congress. And that's going to be tough for Democrats to do, even if some are on board.
And this is to really pay for a lot of President Biden's plans, right?
Yeah.
In order
Domestic
to get through.
agenda.
All right, well, stay tuned for this, and we'll get to that other story that's among the most read soon-ish.
Join Brian Curtis and Doug Krisner live from Hong Kong and New York for Bloomberg Daybreak Asia tonight at 6 p.m. Wall Street time. They're going to discuss the risks related to a potential Evergrande default. That's Daybreak Asia tonight at 6 on Bloomberg Radio. It's 4:15 on Wall Street. Time for Drive Time Traffic. We do it every 15 minutes right here on Bloomberg Radio. Adam Walski, take us to the Grand Central Parkway. What's going on there?
One of several problems in Queens, Tim, on the Grand Central, eastbound at the LIE. The accident there is blocking part of the exit ramp, and you have slow traffic on the southbound Cross Island from the Throgs Neck down to the LIE. Also slow on the Belt Parkway, both ways around Kennedy Airport. It's slow all the way through Queens, eastbound on the LIE from the BQE into Nassau County. Of course, you want to avoid the east side during UN week. 30s up to the 60s could be shut down at any time from the FDR out to about 5th Avenue on the streets and avenues. It is 20 minutes out of the city at the Holland Tunnel, 15 at the Lincoln, and all approaches slow to the George Washington Bridge. In the Bloomberg 1130 3-day forecast, partly sunny this afternoon, highs in the upper 70s, increasing clouds tonight, low 65 to 70. Chance of an evening shower tomorrow with a high 75 to 80. Scattered showers tomorrow night, low 65 to 70, and showers likely Thursday, high 75 to 80. This update sponsored by Staples Stores. Staples is evolving into Staples Connect, a new world of possible with innovative tools for small business and remote workers and learners. Explore what's new at your local Staples store or staplesconnect.com. With the best ride in and out of the city, I'm Adam Walski, Bloomberg 1130.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. After the bell, we heard from FedEx. Shares now lower by more than 3%. First quarter adjusted EPS coming in at $4.37. Estimate was for $4.92. FedEx did cut its full-year outlook. Part of the problem for FedEx, finding workers again. FedEx shares down by 3.3%. Adobe has forecast adjusted EPS for the fourth quarter. That guidance did beat the average analyst estimate, but after ours, Adobe shares tumbling right now by 3.8%. Late day fade as buying enthusiasm waned. S&P swinging between gains and losses, but seconds before the closing bell, we saw the S&P fall 3 points, so a losing session. Another one down just about 1/10%. The Dow dropped 50 points today, also down by about 1/10%. NASDAQ, though, had a big gain, up 32 points today, up by just about 0.2%. Stocks fell in the final few minutes of trading, a day after registering the biggest slide in 4 months, as traders assess risks from China's crackdown on the real estate industry. Also, they're focused on tomorrow's Fed decision. Recapping, S&P fell today, down 3 points, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, really appreciate that update, Charlie. So Bloomberg Green reporting last month that there is some $35 trillion invested in sustainability globally, Tim.
Not surprising.
No.
Given the movement that we've seen from investors and from companies that want to make sure, hey, this is where our clientele is going.
Yeah, and speaking of companies that are focusing on sustainability, that includes McDonald's and McDonald's Corporation's Chief Sustainability Officer, Jenny McCulloch, joining us on the phone in Chicago. Jenny, great to have you here with Tim and myself. How are you?
Hi, Carol. Hi, Tim. It's great to be here. Thanks for having me on the show today.
Well, tell us about your latest announcement when it comes to, we've been talking a little bit about Happy Meals. You guys have made a sustainable move when it comes to them.
Absolutely. We've got a lot underway here in sustainability on our food and on our restaurants and communities. But today it's all about toys and the special fun that the Happy Meal experience brings to families around the world. We announced today that by the end of 2025, we'll be drastically reducing plastics across our Happy Meal toys around the world and transitioning to more sustainable materials. So we're really excited about this news and look forward to talking about that today.
2025, so it's a few years off. Why does it take so long to make a transition like that?
Well, when we think about the scale of McDonald's, we're operating in nearly 40,000 communities in over 100 countries around the world. So when we think about innovation, we have to, really lean with our supplier partners on markets that are really willing to test and lead and take those first steps, and then think about what we can learn from our customers and families and what we can scale later. So what we're doing here is building on some really great momentum that we've seen in France, the UK, and Ireland, where these more sustainable toys have been being rolled out since 2018. And we're working on roadmaps to scale those to other markets around the world. And we may even see some of those in the portfolio as soon as this winter here in the U.S.
I think it's so cool. Jenny, what I love talking about companies like you, really big companies who can move the needle on things, especially when it comes to the supply chain. Is that part of the problem that, going to Tim's point, I'm always like, why can't we just do it now? Why can't we do it in a year and a half or 2 years? Is it because the existing infrastructure, supply chains, what have you, they just don't quite exist yet?
Well, I would say that when we think about innovation at scale, we do need to try different things and get feedback from customers and kids about what works and what doesn't. So part of that is just the typical sort of prototype feedback cycles that you'd expect. When we also think about the Happy Meal experience, we are so focused on the safety and sturdiness of those experiences. for the toys, because we know that safety is such an important part of the Happy Meal experience for our families. So we want to be very mindful as we make changes to the design of the toy. But that being said, we have the privilege to work with some of the world-class suppliers around the world in this area and have amazing designers, scientists, engineers, toy innovators, play experts, all thinking about sort of where we can make changes. And we have seen some really exciting ideas that can be scaled. And so when we think about, the commercial design of a toy from start to finish, it does take quite a while anyway. And so to make these changes is just part of that longer-term innovation process for us.
So what's an example of a sustainable toy or a more sustainable toy? What's it made out of and what does it look like?
Sure. So the materials, when we think about what we're considering more sustainable materials as part of the goal, is anything that's made from renewable, recycled, or certified materials. So that could be certified sustainable fiber, such as in a puzzle or a build-it-yourself dinosaur craft construction project, or it could be from recycled plastic or plant-based plastic that you might see from sugarcane or corn or soybean that gets mixed and derived into more rigid, hard plastic toys. So some of the toys that our customers are enjoying today might be made from plants in the future, and they may not even know the difference in the actual toy experience. But we are looking at sort of both those changes to the toy design as well as some reimagining of classic favorites that just use more innovative materials.
Plant-based is making us think about the food that you guys sell.
Exactly. Yeah, that's exactly what I think about, Jenny, when I hear about sustainability and think about beef and meat. My mind doesn't necessarily go to toys and plastic toys. It goes to the impact that cattle have on the environment, from methane to deforestation. And I'm wondering, as Chief Sustainability Officer at McDonald's, how you think about those challenges.
Well, we think about those challenges very much in concert with where we have responsibilities across all of our offerings for our customers. And we've been on a journey with our food sourcing and our packaging sourcing for over a decade, looking at our sourcing regions, where we can promote more sustainable practices with our supplier partners. And you touched on it with the comments around beef. We have prioritized work on beef sustainability with supply chain partners and NGOs and farmers and ranchers for many, many years. We just wrapped up a series of commitments leading into 2020 where we'd really worked with the industry to articulate a vision for what more sustainable beef production could mean, how we could eliminate deforestation in high-risk regions for beef sourcing and other commodities as well, and also how we can promote and support best practices among farmers who are really pioneering more innovative regenerative practices on their farms and ranches, and help support scaling those practices across the industry with our supplier partners. So while the announcement today is very much around toys and the fun of the Happy Meal, we've been at work for quite some time looking at the sustainability of the food, and this is just one more step in a long line of commitments that we continue to work on, and we'll keep working on as we look forward.
Well, really cool to check in with you, Jenny, and I hope we can get you back. Jenny McCulloch, she's Chief Sustainability Officer over at McDonald's, joining us on the phone from Chicago. I mean, you've got to approach it from like a lot of different angles.
Yeah, I didn't even consider the Happy Meal.
I didn't either.
Really?
No, I didn't either, right, because we don't focus on it. But they sell a lot of them, and if you think about it, that makes sense.
Kids won't know.
No, exactly. All right, you're listening to Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
The contrarian.
Too bad the mics weren't hot for the conversation we just had.
Okay.
Yeah.
There might be hot still to come.
Oh, there is.
When we
there
go
is.
back on air.
Yeah, there will be. Don't worry. I'm not.
Especially when you're talking about Peter Thiel.
Exactly.
It's the subject of a new book, a biography by our own Max Chafkin. He's sitting next to us. You do not want to go anywhere. So grab a good drink, sit down, pull over if you're in a car.
The book is out today. I have it in my hand.
Me too.
It is fantastic.
Good stuff. So we'll get to Max in just a moment. Right now, though, let's get to Charlie Pellet with some of that earnings news after the close.
Indeed, but Hot Mics, what a great name for a book or a TV series. Here's what's going on. We have got the Dow.
Or Hot Pockets.
Yeah, there you go. Exactly. Devour that in a minute. Here we've got the Dow, the S&P, both lower right now with the Dow down 50 points, a drop of 0.1%. Your S&P 500 index fell 3 points today, down 0.1%. NASDAQ higher by 32, up 0.2. 10-year yield 1.32%. Gold up 0.6 today, 17.74 the ounce. West Texas Intermediate crude up by 0.4%, 70.56 a barrel. Perfect day to keep it locked into Bloomberg Radio. Swings for the market today, very choppy sessions. We had stocks falling in the final few minutes of trading a day after registering the biggest slide in 4 months. Traders are assessing risks from China's crackdown on the real estate sector. Also this week's Federal Reserve meeting, and of course we get that decision tomorrow. Earnings front and center after the bell. You thought earnings season was over. With FedEx struggled with higher costs. Package growth stalled, leading the courier to cut its annual earnings outlook on post-quarterly profit below analyst expectations. FedEx after hours down now by 3.5%. Adobe dropping about 4% after a strong sales outlook for the current period failed to impress investors. Big story from Stitch Fix also reporting after the bell. Fourth quarter results beat estimates. Shares up right now by just about 18% after hours. So it did turn out to be a down day on Wall Street today. Eric Schoenstein is portfolio manager at Jensen Investment Management. And right here on Bloomberg Business Week, he told us investors are dealing with a lot of moving parts.
We've got a lot of moving parts, everything from what is the Fed going to do to what kind of tax legislation is going to be out there to what kind of spending. How are we going to treat the fact that we're going to have a fairly large gap in terms of, economic stimulus from what was provided this year to what's provided next year? And all of that creates a bit more of a troublesome direction in terms of trying to think about where things are headed.
In today's session, though, the direction was down. The S&P late fade down 3 points, drop there of 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash. Hot Mics continues.
Hot pockets to come. We talked about Peter Thiel last week, the Silicon Valley billionaire investor, disruptor, innovator, Trump supporter, someone who benefited in many ways during the last president's administration. And that relationship with Donald Trump, it's safe to say, Tim, caught, I think, many off guard.
It certainly did. Unfortunately, joining us now, we have Max Chafkin. He's features editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio. He's the author of that Bloomberg Business Week cover story in the current issue of Bloomberg Business Week, but also of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. The book is out today. Max, thanks for joining us.
Congratulations.
Congratulations. How are you feeling on the day that your book comes out?
I feel really great. I mean, it's been. I'm really happy about the book. Thank you for talking about it. But I also think it's kind of a cool time to be having these conversations. Last week there was this kind of series of stories about Facebook. All these blockbuster Wall Street Journal stories, all the ways that Facebook is kind of, and maybe to put it gently, maybe ignoring their responsibilities to society. And I think Thiel, as this longtime Facebook board member, longest serving board member, is a good sort of way into that.
Well, you bring that up and you remind me of really the beginning of your book, which talks about the way that technology has changed, especially in the context of the way we think about it. In 2016, I think you wrote, Silicon Valley was supposed to save us.
Yeah, absolutely. And I think that is kind of maybe the key to understanding a lot of these stories. So back, 15 or 20 years ago, when Facebook in particular, but a lot of these Silicon Valley companies were really small, kind of these insurgent, troublemakers, there was this attitude of the rules don't matter. We're just going to do our thing. And you know, the Facebook motto famously puts this, whatever. It's all about disruption and stuff. So I think that attitude has kind of been spun forward, and these companies now are basically being held to account for that attitude, the embrace of disruption as an end for its own sake.
So I want to go back to, though, I remember when it started coming out that Peter Thiel was kind of buddy with Donald Trump, and we started seeing the pictures of it, and it was kind of a wait what moment for me. Like, wait, these two guys get along?
Yeah.
What is the relationship?
So it's hard to know exactly what the relationship is, but let me give you a couple of points. I mean, Thiel was the first big deal business person to support Donald Trump. If you look down the list of kind of speakers at the Republican National Convention in 2016, there are some big business names, but they tended to be kind of from real estate or from kind of these marginal industries where Trump maybe had relationships. So you had, the UFC guy, you had Tom Barrack, whatever. These are big names.
My Pillow dude.
Yeah, My Pillow guy. But Thiel kind of brings an added level of stature as this big deal venture capitalist. Now that got him on the inside. He is not, caricaturologically, if that's a word, he doesn't have a lot in common with Trump. He's very introverted. He's not boastful. On the other hand, the thing that was core to Trump's candidacy, I think, and to Trump's appeal is this idea that he's going to say the things that the elites are afraid to say, and that is something that Peter Thiel has cared about all his life. And you see it in his sort of business dealings. He has embraced these companies that are all about disrupting the status quo, kind of messing with existing institutions, and in his political dealings where he's kind of embraced these, basically provocateurs.
Well, that's what struck me, though, in the excerpt in the magazine, that he was the face that was saying these things out publicly, and there were other big tech executives that seemed to kind of remove themselves, and yet from the reporting that behind the scenes they were like yeah, or supportive of things that maybe if it was as public we would have all thought differently about some of those folks.
Well, and I think
I'm being very vague.
Yeah. So what you're talking about is let me fill it in just a teeny bit. I mean, in the excerpt, Thiel, of course, is ingratiating himself with Trump, but so were many of these other executives who had made public statements opposing Trump. Now, I think that is not hugely surprising because it's kind of the nature of business people to basically do what it takes to make their companies profitable. That said, I think Thiel kind of led the tech industry in that embrace. Thiel kind of showed them that it was okay to kind of go along with Trump and to try to sort of make peace with some of these hugely controversial things, including, the trade war with China and also Trump's immigration policies, where you had these CEOs who, again, publicly previously had made statements, of opposition, and then they were trying to find some kind of accommodation. And I think Thiel gave that to Trump. He gave Trump a little bit of credibility that he would not have otherwise had.
And you do wonder about what this means for Peter Thiel going forward. We're going to continue the conversation. Max isn't going anywhere. We're going to stay with Bloomberg's Max Chafkin, his book, The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power.
Let's get a check of world and national news. In the meantime, Nancy Lyons is in D.C. Hey there, Nancy.
Hey, Tim. President Biden is assuring the United Nations the U.S. is back at the table in international forums, prepared to lead from COVID to climate.
The president said that instead of continuing to fight the wars of the past, the United States would stress diplomacy and alliances.
The United States will continue to defend ourselves, our allies, and our interests against attack, including terrorist threats. But the mission must be clear and achievable, undertaken with informed consent of the American people, and whenever possible, in partnership with our allies.
The president said the United States will oppose efforts by stronger countries to dominate weaker ones, whether by force, economic pressure, or disinformation. In Washington, Irv Chapman, Bloomberg Radio.
The FDA is expected to decide as soon as tomorrow on whether to recommend COVID-19 boosters made by Pfizer and BioNTech. If approved, a program for the extra shots could start in just days. Johnson & Johnson says a booster of its COVID-19 vaccine 2 months after the first shot offers 94% protection. The company says additional data shows a 4-fold increase in antibodies when given at 2 months compared to a 12-fold increase in antibodies when the booster is given at 6 months. An autopsy is being conducted today in the death of Gabby Petito after a body was discovered over the weekend at the Grand Teton National Park in Wyoming. The body is believed to be Petito, but a forensic identification is being conducted for confirmation, as well as an autopsy to determine the cause of death. Her fiancé remains missing and is wanted for questioning. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Still here with Bloomberg's Max Chafkin. Let me put a little apostrophe S in there. His book, At the Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. Favorite point in the book?
I mean, my favorite this kind of runs through the book, but it's the relationship between Peter Thiel and Elon Musk. So they are allies. They were co-founders of PayPal, but they've also kind of been at odds at all sorts of times. Thiel famously led a coup against Elon Musk, took his job. Then, Elon Musk was failing. His space company was about to go under. Thiel comes in as kind of a white knight to save the company. And you get the sense that they really depend on each other, that they're allies, but that they also just do not quite like each other. They are so different from one another.
How's he viewed by other members of the so-called PayPal Mafia? And also explain what that is for people who aren't familiar with it.
The
Reid Hoffman and others.
Yeah, so the PayPal Mafia is this network of former PayPal executives who all kind of work together informally. They invest in each other's companies. Employees will sort of bounce from company to company. It's a way that, the mafia metaphor is a little clumsy. Of course, it's not a violent network, but it is a network where loyalty is a really big thing. And there's an understanding in Silicon Valley that like one way to make your career sort of take off is to be embraced by this world, to express the ideological and sort of business ideals that they value and use that as a sort of stepping stone to success. And it's a reason why Peter Thiel has so much power, because it's not just money. I mean, he's rich, but he's not that rich as far as billionaires go.
Right.
But I'd say he is, probably the most influential of these tech moguls, and it's because of this really big and powerful loyalty network.
Incredible network. Just 20 seconds here. Do you get the feeling that Thiel and Musk pick up the phone and have a drink together occasionally, or no?
I think they see each other from time to time.
Okay.
I think it is awkward. Once you've gotten somebody fired, even if it was 20 years ago, I think, you never kind of get over that.
Hey, bud. Okay. The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. We're going to come back with Max Chafkin in just a moment. You're listening to Bloomberg Business Week on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on FedEx after hours. Shares down now by almost 4%. FedEx during the quarter struggled with higher costs as package growth stalled, leading the courier to cut its annual earnings outlook and post quarterly profit below expectations. Again, FedEx shares down by almost 4%. Also trading lower after hours, Adobe, it's down about 4% after a strong sales outlook for the current period failed to impress investors who have pushed up the stock almost 30% this year. Stitch Fix shares, they are surging 14%. Fourth quarter results beat estimates. Turned out to be a down day for the S&P 500 index. Late day fade really in the final few minutes of trading. S&P was down 3, a drop today of just about 0.1%. Stocks fell after dip buying enthusiasm waned. The Dow down 50, a drop of 0.2. NASDAQ up 32, a gain of 0.2. 10-year yield 1.32%. We had gold up 0.6%, 17.74 the ounce, and West Texas Intermediate crude up 0.4, 70.56 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet, for that update. Let's get back to Max Chafkin, features editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker studio, and today is the day that his new book, The Contrarian, Peter Thiel, and we're continuing our conversation with Max. Max, I want to talk more about politics in just a second, but I want to get an understanding for how Peter Thiel, the Peter Thiel that we see today, the Peter Thiel I think that a lot of Americans met for the first time during the Republican National Convention when he spoke there in support of then candidate Trump. What was the point that he became that Peter Thiel?
Yeah, I mean, it built over, a couple of decades, and it kind of started, you go all the way back to his childhood. I do in the book. I mean, he was, smart, introverted guy, kind of bullied as a kid, and kind of basically pours a lot of that grievance, maybe you would call it, into this kind of activist career at the Stanford Review, which was a right-wing newspaper. He started at Stanford in the 80s. There's a lot of this going on. At the time, there were other. It's pretty similar to like the Dartmouth Review and the Cornell Review. There are a bunch of these kind of conservative bomb throwers. And Thiel does something almost very odd, which is then sort of after bumping around in law and banking, goes to Silicon Valley and starts PayPal, and then these PayPal co-founders, many of whom came from the Stanford Review, basically, joined in with him, and they become this kind of disruptive gang of troublemakers and of world builders, people who are investing in the most interesting, most profitable, most powerful companies, and as his profile raises, he's still involved in that kind of conservative, political world, and I think that's what we saw, at the Republican National Convention. Thiel's speech, while not necessarily very polished, I think is a really important moment, both for like the history of the Trump presidency, but also as the first openly gay person to acknowledge that at the Republican convention. He got a round of applause. And also his critique of then candidate, of Hillary Clinton in support of Trump was kind of a very smart formulation that I think was useful to Trump, which is that Trump is somebody who's going to blow up the system, the government's not working, and I think Thiel, served a really valuable purpose both to Trump and to the Republican Party.
Which is kind of interesting, a day where we talked to Bill Ferries covering Joe Biden at the UN, where Biden is kind of disrupting some of those old relationships. We thought we could get back to normal. We continue to kind of see that out there in force. I wonder what Peter Thiel's all about. What's his end game here? Especially as he, he's a disruptor and yet he's backing political candidates. That feels like a much more traditional route for a leader.
So I think he's got kind of two end games. Thiel, as we're talking about, during the break, he's a hedge fund guy at heart, and he wants to find good investments and optimize his portfolio and continue to grow his net worth. So he's continuing to invest, but of course, unlike a lot of hedge fund income guys, Thiel also has a political project. And I think the political project is very much in line with his work as an investor. And that's kind of what makes him interesting. It's fairly unusual, although not, of course, unprecedented, because that's very similar to what like the Koch brothers did for at least for a long time. Now, what he's doing now is trying to cultivate what you might think of as the post-Trump wing of the Republican Party. So these are people who voted for Trump, who are really into Trumpism, and who want to see it continue. And Peter Thiel is one of those people. I mean, he has embraced the ideological component of Trumpism, if not totally Donald Trump. And the candidates he's backing, so there are two big ones right now. One is J.D. Vance, who's running for Senate in Ohio, and the other is Blake Masters, who's running for Senate in Arizona. Thiel's given $10 million to each of them for each has a super PAC, and they are really running as kind of ideological extensions of Peter Thiel's worldview. Like their positions are very much in line with his ideas and also some of his business priorities. It's J.D. Vance not too long ago put out a statement in support of crypto, and it's kind of interesting that an Ohio populist supports crypto. But of course, there is this worldview, and that's part of the worldview. And the other thing that's probably worth saying is that yes, Thiel supported Trump, and yes, Trump kind of left the White House, not under the best circumstances, of course, a pandemic, an insurrection, and you would think that that would not be great for a Trump supporter. But Thiel, in a weird way, I think is in an even better position now than he was, in 2016. Both Masters and Vance, kind of work for him. Masters is still an executive at Thiel's hedge fund, at the family office that manages Thiel's macro investments, and still works at the Thiel Foundation. J.D. Vance worked for Thiel. They've invested alongside one another. These men may or may not lose, but the sort of Peter Thiel as a behind-the-scenes power player, that is going to continue. And I think, he could play a really big role, in terms of shaping the direction of the country in 2022, 2024, and, potentially beyond that.
Is that his legacy beyond business? I mean, from Stanford to PayPal to Palantir, to before that suing Gawker. What's next for him? What's his legacy?
Yeah, I mean, I think his legacy is this this far right conservative project, which includes hawkishness on immigration. That's a big part of it. It also includes the kind of nationalism, which again is very strange for somebody who's a libertarian. But probably most importantly, it includes the elevation of these disruptive companies. I mean, you brought up Palantir. That's a great one. And Palantir has grown tremendously over the last 5 years. It's on its way, if it's not already, becoming one of the main defense contractors.
Got to ask you, would Peter Thiel not be as interesting if Donald Trump hadn't come along and you hadn't seen that relationship, in your view?
No, yeah, 100%. If he had just stayed a Silicon Valley guy and just continued to be, the investor in Silicon Valley. I mean, we talk about investors all the time. They're really interesting. But of course, it's when you cross over into the economic, into the cultural realms that I think, and political realms, that it gets super interesting. Now, what I will say, though, is I think that backing of Donald Trump was almost inevitable. I mean, Thiel is not the only Silicon Valley guy we're seeing engage politically. We were talking during the break about Reid Hoffman, huge Democratic donor, and also, of course, a good friend of Peter Thiel's. And I think these companies, we're seeing, Facebook, Apple, Google, Amazon, they're all having to engage more with the U.S. government. So I think in some ways, Thiel was just a little bit ahead of the curve. He wasn't,
right.
These guys are all going to be playing this role, and they're going to be forced into it almost whether they like it or not, because when you get this big, regulators get interested, and then, companies will do what it takes to defend their interests.
And he's out there already. Great stuff. Congratulations. So great to have you here. The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. Our own features editor here at Bloomberg Businessweek, Max Chafkin. Highly recommend that book.
Well, coming up in just a couple of minutes, it's time for Sound On with Joe Matthew. Joe joins us now to give us a little preview of what you got coming up on the show, Joe. Hey there.
You guys are bringing back memories of the Trump convention, the big Peter Thiel speech. I'll never forget it. Tonight,
that's right.
We get into this government funding bill. Is it going to work with the debt ceiling? They're going to vote, looks like, guys, in about 90 minutes. We'll talk with Congressman Henry Cuellar, a Democrat from Texas, to start things off.
Looking forward to it. Joe Matthew with Sound On coming your way. For the whole Bloomberg Businessweek team and Tim Stanovic, I'm Carol Masser. Have a good and safe evening.